Good morning, everybody. Welcome back to the channel. We are here on another episode of the Market Open. It is a Monday, December 30th, 8:46 a.m. Eastern Standard Time, and it looks like, well, first of all, we have 2 days left of the year, today and tomorrow, and then we're in 2025, which is going to be crazy, but it looks like the Santa Claus rally that many of us, including myself, expected for the end of the year, at least in the pre-market, it's not happening right now. So we have a lot to talk about, a lot to dive into in regards to what's going on with this Santa Claus rally. If it's going to happen, if it's not going to happen. Bitcoin below 93,000 right now is definitely not helping in terms of that Santa Claus rally happening. The 10-year coming down a little bit, down from last night, 4.6 to 4.5, but still 4.5 on the 10-year is also not helping. And you've got all the big cap, large cap stocks, Tesla, Meta, etc., down about 2-3% in the pre-market. So what we're looking at right now on Monday morning is very similar, if not worse, than what we saw on Friday morning. Friday morning, it was kind of a little bit of a tease. It was red, but it wasn't really red. It was maybe down 0.5, 0.7% across the market. Now you got the S&P that's legitimately down 1.19% in the pre-market. So this is a red, and either it reverses on the open or it continues to compound down. We'll see what happens at 9:30, but we definitely do have some red in the pre-markets, and we'll be analyzing and discussing why we have some of this red and go deeper there from there. But before we get into that, how was everyone's weekend? Thank you, everybody, for being here today. Another day on this earth, another day to be alive. Obviously, we got markets to analyze, but still, it is Christmas vacation, holiday vacation for a lot of people that have off from work, off from school, etc. And so I hope everyone is at least getting some time to enjoy with their families and take a little bit of time away from some of the red that we're seeing now in the pre-markets. Erwin, what's up? Good morning to you. Dylan, good morning to you. For real, good morning. CJ, what's up? Custard and Chips, hello. Dents, John, good morning, good morning. Gene, what's up? Corey, what's up? Walter, good morning. How many people got sick as well? I almost got sick. I think I told you guys a week ago when my throat was hurting. I thought I was going to get sick, but I avoided it. So thankfully, I avoided it. Hopefully I keep avoiding it, but there was a bunch of people in my neighborhood that actually got sick. 103, 104 degree fevers. So yeah, so far have been good on that front, but just got to last through the next couple months as well. I'm Beneficial. What's up? Martin, good morning. Buck Travel, Corey, good morning, good morning, good morning to everybody that is here today. All right. I think we'll get started. Damn, some of you guys were really sick. Martin said sick for 5 days. James says he was puking and he was sick. Goodness. All right. We got some people that were definitely sick. Zach says my daughter had a 38 degree fever Christmas morning, had to go to hospital. Yeah, it is definitely going around, and I felt like I would get it, but when my throat was hurting, but thankfully I was able to avoid it for now. So for those that are sick, hopefully you're getting some time to relax, some time to just take a little bit of a break. And in 2 days, we get back into the grind of the brand new year, and 2025 begins, and we see what ends up happening. Did you get a chance to watch Squid Game 2? I did. I didn't like it. I've talked about this for the past couple of days. I just texted Arnie about it this morning, and Arnie was like, he didn't like it either. So if Arnie didn't like it, and Arnie's opinion I respect a lot, then I think I'm kind of right that this season sucked, and hopefully, season 3 or season 2 part 2, because this really felt like a part 1 of season 2, and I wish they had just named it that, because that would have made it easier to digest versus like a season 2, because it was not a complete season 2. At least it didn't feel like that. All right, let's get into the markets and see what's going on. So first thing we're going to start with, I said the 10-year had come down, but the 10-year just went up a little bit, even though it's still down. We're at 4.565. We were a little bit lower than this in the pre-markets, but now we're higher. Last night we were at 4.625, so at least we're down from where we were last night. This 10-year is one of the reasons why equities are having a hard time having a Santa Claus rally. So for everyone asking why isn't that Santa Claus rally happening, one of the reasons, that's at least one of the more obvious reasons that is out there, is that the 10-year is not coming down. And the 10-year is refusing to really meaningfully come down, even though Jay Powell's lowering rates. And as a result of that, you are not seeing equities have an easy time to compete with bonds. Obviously, if a 10-year is giving you 4.5% and it's virtually no risk because it's guaranteed by the United States government, locking in that yield versus taking the risk of buying Meta, Amazon, Palantir, and hoping that they execute is just different. And the bond market has over $300 trillion in assets. People think the bond market is like small compared to the rest of the world. Equities are obviously much larger, but $300 trillion in bonds are like that's a lot of money that's out there. And that's a lot of money that potentially could rotate from bonds into equities if they want, or from equities into the bond market if they think equities aren't offering a good deal. So the bond market is kind of liking this right now. The equity markets are not liking this right now. But one thing that the bond markets, I think, understand is that it's inevitable that this 10-year comes down. The question is, how stubborn are they going to be in the process of it coming down? And unfortunately, we've seen them become very, very stubborn. Now, why are they being stubborn? They think inflation's not coming down, which is a theme going into 2025. Will inflation meaningfully come down for the 10-year to finally fall off a cliff? Or is it going to be elevated enough? We get results on January 15th for CPI starting in 2025 to keep the 10-year elevated and potentially take the 10-year even higher. And if it does go higher, that is where I think we're going to get the chunk of volatility starting in January. This 10-year versus inflation versus interest rates, that whole game we played for the first 5 months of 2024, I think that's going to bring itself back in 2025, and we're going to have to see how Trump handles that as well. Take a look at Bitcoin. We got a nice red candle right there. Bitcoin tanking to levels that we haven't seen in a while. We saw 92 a week ago, but it wasn't a sustained 92. So we saw 92,122, but as you can see, it was very quick, and we rebounded all the way back to 99,000. So that was a very quick 92. Now we're actually holding 92. We're not at the absolute low of 92,122 that we saw a week ago, but we are at 92,534. This is down from 99,000, and that's not good for Bitcoin. Definitely not good for the broader macro. Now, why is this also not good for Bitcoin? Well, someone keeps buying, and unfortunately, Bitcoin keeps going down, and that someone is none other than Mr. Michael Saylor. So we talked about Michael Saylor last night. We talked about his strategy, what he was doing, why it was not really the best for the stock at the moment, just from an objective standpoint in terms of the dilution that he's issuing. Today, you got some more dilution. So MicroStrategy buys 2,138 Bitcoin. It was his smallest Bitcoin purchase in a very long time. I mean, 209 million is pennies for MSTR in terms of their Bitcoin buys, but nonetheless, they did buy another $209 million of Bitcoin, $97,000 per Bitcoin. Bitcoin's at 92,000, so they're already underwater on those. Their average is 62,000, so they are averaging up. They now hold 446,000 Bitcoin. Now, this is Saylor's 7th week in a row of buying Bitcoin, but it's not being done through convertible notes at a 0% interest rate, which was like the coolest thing in the world when everyone found out about it. It is being done by issuing shares of MicroStrategy common stock to shareholders. Shareholders are buying those shares. Saylor's taking the money that they spent to buy the shares. He's buying Bitcoin. Last week, MSTR filed for the ability to offer 10 billion shares to the public. They currently have 330 million shares outstanding. I think this sentiment around MSTR has hit an all-time low. If you look at, well, not an all-time low in terms of like, oh, the stock is bottoming, but just, I mean all-time low in terms of like the feeling of what he's doing is not resonating with people. Obviously, when the stock was trading at like $20, that was like a true all-time low. But you can see in the comments right here, I mean, people are just like, why is this happening? This guy said from 530 a month ago to 280 end of day. Great shareholder appreciation through dilution. Thanks, Saylor. I bet when Bitcoin gets to 120 grand, we might get back to 400. I don't know if this guy owns MicroStrategy stock, but it sounds like he does. And it sounds like he's kind of pissed off, right? And so it does feel like the sentiment around MSTR, this person says, is it me or is owning MicroStrategy a little less attractive now? That sentiment is shifting to people being like, why is he doing all this dilution? And why is all this dilution being deployed in a way that is not really buying Bitcoin at the bottom? I mean, he has every single day he has bought Bitcoin at like last week, he bought Bitcoin at 106,000. And then Bitcoin went to like 95,000. And people are like, why aren't you just waiting a little bit? Or why do you suck so badly at picking the top? And again, Saylor will say that he's been buying the top forever. So it is what it is. But Saylor's long-term view is that he wants to get as much Bitcoin as possible because for the next 5 years, he believes Bitcoin is going to appreciate at an average of 60% every single year before it goes down to 20% and then eventually 10% if it reaches the market cap of gold. It's going to be less volatile in the future. So if Bitcoin has another 5-6 years of going up 60% every year on average, whoever has the most Bitcoin theoretically should be able to have the most Bitcoin yield, which is this new metric he came up with. The problem is shareholders are like, wait a second, the Bitcoin yield is calculated by the number of shares outstanding divided by the value of your Bitcoin. And if you keep having more shares outstanding, that Bitcoin yield should go down. And Saylor knows that, but he also thinks that Bitcoin's going to go up so much. For example, let's say Bitcoin gets to 500,000, that it doesn't matter if they have 10 billion shares outstanding, because like the fact that they have so much Bitcoin means that the actual net asset value of their Bitcoin plus the premium that's going to be attached to it is going to be really good. And so Saylor's hoping the pace of growth in the Bitcoin yield, aka Bitcoin going up, is going to outpace the growth of the dilution of the stock. And someone's going to be right, someone's going to be wrong, but in the next 5 years, I think we're going to have answers to kind of see how this plays out. Doug says people want to be rich in like a month. It has to climb the wall of worry just like everything else. I agree, but I also am sympathetic to the MSTR shareholders that are saying this isn't a wall of worry. This is like just pure dilution for the sake of having more Bitcoin. And I think the shareholders are like, it was fun getting Bitcoin for free at a 0% coupon. It's not fun if we're paying for the Bitcoin. I think that's what shareholders are pretty upset about. Gene said, question amid, why isn't Saylor getting the 0% convertible note offering? So this is something I'm confused about as well. To my understanding, he has already raised a ton of money from convertible notes, and that money is locked in, and there are certain execution dates that he is allowed to deploy that money to be able to buy Bitcoin. Either he has run out of all of the convertible note money for the time being in 2024, and they're going to start again in 2025, or he has certain conditions on when he's able to deploy that money. I really don't know the exact answer to this. And if someone else knows, then let me know in the chat. But I think his logic is, hey, if we don't have access to the bond market right now, for whatever reason, we do have access to people buying our stock. And that's what he's taking advantage of. So regardless of what's happening from the convertible note markets, he wants to get more Bitcoin. And if he wants to get more Bitcoin, he's going to do whatever the hell he has to do to get that Bitcoin. Tom Lee's on CNBC. Okay, let's switch over to Mr. Tom Lee on CNBC Live, and let's get his take on what's happening. Was he just on, or about to be on? So we'll catch him right when he gets on. Doug says he's been doing this for years. If you bought MicroStrategy because MicroStrategy goes up, you fundamentally don't understand what you bought. Look, I agree. If anyone buys MicroStrategy for the pure reason that MicroStrategy is going to just go up, yes, I think the investment thesis was probably incorrect, because there's a lot more nuance to how they navigate their Bitcoin purchases. However, there are OG MicroStrategy shareholders that I've been talking with that are really freaking annoyed at this at the money offerings, because Bitcoin's at an all-time high, literally. And if he was doing this when Bitcoin was 20,000, it would be different, which he was, but he wasn't doing it at this scale. Now that Bitcoin's so high up, I think a lot of people just want to give the cycle a little bit of a break, see where the momentum is. Saylor's not that type of guy. He will go buy, and he will not care about what anyone thinks. And if you're buying MicroStrategy stock, you just have to get used to that. That's it. So Doug's right. If you buy MSTR for the pure idea of it'll go up, that might not happen. But if you buy MSTR with the idea that Bitcoin will go up in 5 years and MSTR will have the best yield appreciation of that Bitcoin, then maybe you'll be right. But again, it all depends on if Bitcoin actually will be able to get that. Audio is crashing. Hold on. We have a new mic. Let me change that real quick. Audio better? Is the audio better? Let me see on my end. It should be better now. Yeah, it should be better. It should be better. It should be good. It should be good. Yes. Worse. Worse. Yes. Yes. Good. Boom. Win audio. Win audio. Correct. It should be good. We got a brand new mic setup, folks. If this thing is not working, then it is absolutely freaking StreamYard at this point, and we have to find an entire new setup. It should be good now. It should be good. All right, good. We got a brand new setup. You guys don't see it. It's in the background. It should be better now. Good. Yes. Yeah, it's good. I can hear it on my end. All right. If it breaks up again, let me know. Let me know. That's so weird, dude. That's so freaking weird. But it should be working now. All right. Good. We're good. I still have a stand for my mic. I didn't set up the stand yet, but this mic will not. You guys can't see the mic right now, but it's going to be in a stand later, so you'll be able to see it. I think that'll improve the quality as well, because it'll be like in a stable spot. But with the actual mic setup, I got a brand new back. It's the same mic I have. The filter that I run it through is different. I went to Best Buy over the weekend, got everything I need to get. So hopefully that should be okay. Anyway, to wrap the bell up on Saylor, he's diluting shareholders. You either love it or you hate it. If you're a MicroStrategy shareholder, you might love it if you bought in the 30s or 40s. With the stock at 300, you're still up 10x. If you bought at 500, 400, which shockingly, not so shockingly, that's what most people buy when it runs. My strategy right here down 4% on the day. You're probably not that happy with the. It's bad again, though. Holy crap. Okay, hold on, hold on. Well, it's okay. Let's see. Hold on. Is it still that bad? It's okay. Let's see. Okay, the mic should be better now. It's not bad internet. Trust me, it's not bad internet. It's not bad internet. It's good now. We're better now. It's not the gain either. It's not about increasing the gain. The gain is pretty nicely on the. All right, let me switch back to the old mic, and if it sucks, then let me know, and then I'll switch back immediately to the different one. All right, this is the new setup mic. Let's see if it works. The new setup mic. Is this better? Is it good? Let's see. This is so weird, bro. Why is this? Yeah, it's better. It's better now. It's better. It's better. That's weird though. It's getting in and out. It's getting in and out. It should be good now. It should be good. It should be good. Turn off noise cancellation. Noise cancellation is off already. That's not the issue. Mic background noise is off. Echo cancellation is off. I click this. I click the different setting. Automatically adjust mic volume. Maybe that helps, but this should be better now. Let me know if it sucks again. Sorry, guys. I don't know why it's been being stupid. Hopefully it should be a lot better. Okay, so apparently Tom Lee was already on CNBC and we missed it live. We'll try to get that clip in a second and we'll see what Mr. Lee was saying. But I think Tom Lee, I'm also interested in his perspective now. Is small cap still the place to be? Is large cap the place to be? Like, I think a lot of people now are kind of worrying where it is, how it operates, and how we should be thinking. All right, Mike is good right now. Let me know again if it sucks. This is StreamYard at this point, guys. I've changed my setup. This is not me. This is freaking StreamYard. And that means we got to look for a new platform at this point. Because it's absolutely not the internet and it's absolutely not my mic setup. I brought a brand new audio filter, all that. It was working over the weekend too. We did a couple streams and it was fine. So it's StreamYard bugging out like this market. All right, so before we get that Tom Lee clip, let's look at what we got going on in the pre-market. In general, again, MSTR sucks for the dilution, but if you believe in it long term, then I guess that's why you buy MSTR here. S&P down 1.3%. Folks, that's red. Down 1.3% is absolutely red. Nat gas prices, this is another reason the market is down. It's up 16% today. Natural gas prices are up 16% today, which is having an impact across the entire market. That has oil up about 0.55%. And that has nat gas up 16%. We can see in the futures right here was up 17% at one point. That is another reason you could argue that markets are getting a little hit. Yes, natural gas futures right here up 17%. I still don't know exactly the reason for this. I think there's a couple of reasons going on for why this is happening. But regardless of the reason for why it's happening, it is happening. And that is something that I think all of us have to deal with because that is going to have massive implications on the equity markets. One of the reasons I think was because in Europe, they're using more natural gas just because it's getting colder there. So like there's just more usage of the product itself. Basically what Doug said right there. It's winter and Europe needs to heat their homes and businesses. Yeah. And that means that we are going to see prices go up, and that's not the best for equities. So you got Palantir down 3% right here. Google's down 1.72. SoFi's down 2.8. Meta's down 1.64. Tesla's down 2.5. Nvidia's down 2%. Grab is down 1% on the day. Color Technologies down 3.2. CleanSpark down 3.7. Marathon down 3%. Coinbase down 3%. Amazon down 1.4. Robinhood's down 3.38%. So the fact that the S&P 500 is down 1.19%, and then the NASDAQ, the Qs right here, are down another 1.34. That means all of big tech is taking it on the chin today as well. And as you can see on the left-hand side of my screen, everything is getting a little bit of red. And that's why things are getting hit right now. It is one of those days, correct? It is one of those days. Beneficial says, why is it up 16% today? Wasn't it winter yesterday, last week? I would imagine that the amount of demand coming in like exponentially went up today or over the past couple of days, but now we're seeing it in the aggregate futures prices themselves in terms of how they're going higher. So I don't think it was like one day people woke up and started turning the heat on, But probably over the past couple of days, because of more people started turning the heat on, that is what's causing the price to start to go up and start to go up vertically in a short period of time. Which means hopefully it stabilizes up 17% and doesn't go up another 17%. But that's something that's going to have to be controlled, especially when you're talking about Europe dealing with Russia for a lot of their gas needs as well. I mean, there's just a variety of factors here geopolitically that are affecting natural gas prices, and it's not going to help with inflation. It's definitely not going to help with this 10-year that's continuing to be stubborn. And if the 10-year continues to be stubborn, then equity markets will be stubborn as well, as they're not going to let up that easily. And so this is what we're dealing with right now. We have to try to be able to navigate it. But right now, there is not a meaningful way, I think, to deal with this other than realize that things are going to be a little volatile. Things are going to be a little volatile. This is another reason as well. Russia may close gas lines temporarily. And again, this was the problem with this is one of the major byproducts of the Russia-Ukraine war. It's like a lot of these countries, like Germany, they get a lot of gas from Russia. And so if Russia stops it, or if they have bad relations and they just stop importing oil from them, who are they going to get it from? And if they don't get it from someone else who's going to give them a good deal, this is why India, people aren't happy that India is getting buddy with Russia. India's like, dude, we have 1.5 billion people that need energy, that need oil. Like, India's philosophy is, hey, we got to look out for our people. And if Russia's giving us cheap gas, we're going to take it from them. So that is a new, I wouldn't call that black swan event, but that is a new little variable that has popped up in the midst of all the volatility that we're seeing. And we're going to have to see how we analyze that over the coming weeks. Jody says that's why we need more nuclear. 100,000%. That is why we need more nuclear. And hopefully companies like Oklo, which are promising young startups that are public, can deliver some of that. Oklo right here down 3.4%. They've gotten a couple deals over the past few weeks, but nothing major in terms of reverting the entire energy paradigm that we have right now. We need like 1,000 more Oklos to really begin a nuclear revolution. Unfortunately, we are not there yet. So as you can see, everything is red right now in the pre-markets. AMD, by the way, AMD got an upgrade to $175, and it's the best buy, I think, for Loop Capital. We're going to look at that upgrade in a second. But AMD right here, that one is down 1%. Intel's down 2%. Walgreens is down 0.5%. Some of the energy names like Kinder Morgan are up slightly in the pre-markets, but they're up very slightly. Archer Aviation, growth stocks that are speculative right now are going to get hit. That one's down 4%. Reddit's down 2.76%. The quantum names, let's take a look at them. They're all down in the pre-markets. QUBT, Rigetti, Google, IONQ, and D-Wave. All of them are getting hit right now as well, along with the rest of the market. All the crypto names are getting hit. Bitcoin, 92.5. This is the longest it stayed at 92. Usually it hits 92 and it bounces really quick. It's been at 92 for the past 20 minutes now. So hopefully it doesn't break lower, but the strength is not looking that good on Bitcoin. Former President Jimmy Carter has died, correct? DRK, he actually died yesterday, not today. So rest in peace to former President Jimmy Carter. I believe he was 100 years old, or he was very close to that age. And he did pass away last night. So he had a lot of things that happened over the weekend, and a variety of those different things are having different impacts, not even across the economy, but just across the American public in terms of what's happening. He was 100 years old. Yeah, he was 100. Look, Jimmy Carter was one of those presidents where I don't know that much about his presidency, but about the man himself. He was a good human being. There was this clip of him, I think 10 years ago on an airplane, and he was shaking everyone's hand because they all recognized him, but like he actually stopped to shake every single person's hand on the airplane. So he was a man with good character, a man that actually cared about people. You could disagree with him politically because he's Democrat, and all, the political disagreements or whatever if you're on the opposite side, but he was a good person. And he unfortunately did pass away yesterday. On top of Jimmy Carter passing away, this is another piece of news that happened last night or over the last 2 nights, which it's very sad, but it is what it is. And I think it's going to make a lot of more people scared. These images are graphic that I'm going to be showing right here. So just watch out for that if you don't want to see it. We had a Boeing crash. In South Korea. 737, similar issue with Boeing that we've seen for a while. 177 people on that flight were dead. 2 people survived on this flight. Now, the rumor is right here that the flight crashed because a bird strike caused a problem with the landing gear, causing the pilots to try and land the plane with no gear deployed. That is the rumor. Either it is the landing gear that was not able to come out from the airplane due to something external like birds messing with the gear, or it was a structural deficiency inside of the Boeing 737, which caused the landing of the plane to result in a crash. Not the taking off, not in the air, but literally the last part of the journey to just land. They were not able to land and the entire plane blew up. But that's not all. On top of that, then you had an issue in Germany last night in regards to what's going on with Boeing. So take a look at this. This flight that was in Germany in the Halfix airport returned shortly after takeoff Monday due to a landing gear issue, which was resembling the defect in Sunday's deadly crash that killed over 170 people. And so this one took off, and as soon as they realized their landing gear was not actually like deploying, they like went back to the airport and just like stopped flying, because obviously everyone has seen what happened in South Korea and no one wanted that to be the case for them as well. And so this is two incidents in regards to Boeing that we don't fully know if it's Boeing's fault, because, you know, we still have to figure out if this was a Boeing structural issue. I know a lot of people are claiming it is a Boeing issue for sure in regards to what's happening right here, given it is the same type of model that has happened for Boeing, that 737, over the past couple of years at this point. But obviously there's going to be a probably multi-year investigation in terms of seeing what's happening. This is the one that was returning back to Germany right now with the malfunction that it had. So you got two bad headlines for Boeing in the span of 48 hours. The question is it actually Boeing's fault or is it something else's fault? Boeing stock right here is down 3.32%. Look, Boeing did bottom at $120 back when the union strikes were happening, I think 5 months ago. And then Boeing went all the way up to 130. Yeah, we were at 137, or not even 5 months ago. This was November 18th. And now we're at 180. So it's been a pretty strong rebound in terms of the stock. But I think everyone is a little hesitant when they see that they're flying and there's a 737 that they're getting on. Now, the majority of Boeing 737 flights have been fine. Nothing has happened. But you see headlines like that, and you're just like, what if my flight is the one that doesn't have the landing gear that's working? And it's scary. It is very scary. I mean, you just don't see these headlines with Airbus ever. And if you do, they're swept under the rug because they're not as common as the ones with Boeing. So I think that's what we're going to have to see. Chana says it could have been the South Korean accident through a pilot error. It's premature to speculate. Yeah, I agree. It's definitely premature to speculate. That is fair. And we're going to have to see what this turns out to be after the investigation. The problem is this investigation is going to take years. I doubt we're going to get a definitive answer anytime soon. And regardless of if it's premature to speculate or not, the general public sees Boeing and crash in the same sentence again. It creates a little fear. Now, granted, there's only really two airplane manufacturers, Boeing and Airbus. So if you've got to fly somewhere, you've got to get on one of them. And if you have to get on a flight and you're not going to take a boat or you're not going to drive, then you got to deal with it. So I think consumers don't really have a choice, to be honest, but it's still, from a brand sentiment perspective, obviously it doesn't feel the best when we see these continuously happen over and over again. Makes me want to swim to my vacations. Yeah, it's not fun. Doug says when you start to see the same story all the time, you stop caring about the investigation results. Yeah, it's about public perception at this point. I would imagine the Boeing CEO and C-suites are going to do some interviews soon because they need to do some damage control on this. And they need to clarify if it was a structural inefficiency or if it was something external to Boeing for why this crash actually happened. There was an analysis of the crash on a flight expert on BBC, and he said the main reason so many people died was due to the airport structure. Yeah, we will find out. We will find out soon. And from those results, we will then get to know. Airbus does use Palantir. That's correct. Boeing does not use Palantir. Airbus does. I don't want to say Palantir is the only reason Airbus hasn't had issues, but I mean, one could argue that if you have your data set up in the right way, you can actually do quality control. Because a lot of this stuff is quality control. A lot of this stuff is before the airplane goes out, there's just not enough being done to make sure that every single part is working. You know, that could be a reason that potentially could be solved by software as well. All right, Tesla's down 2.6%, Meta's down 1.8%, SoFi's down 2.5%, Google's down 1.6%, Bitcoin 92,700, a little bit of a bounce on the bottom at 92.4, but we are still down. Palantir is down 3% on the day. Let's do a poll in the chat, and this poll is going to be, do we reverse or do we continue red? And if red wins, then that means sentiment really sucks right now in the pre-markets on this current state of markets. Yeah, we got 55% red already. Look, if I had to bet, I kind of would agree. And maybe I'm being prisoner of the moment in terms of the red that we're seeing. But I don't see the catalyst for why we would reverse today. Like with a pre-market that's this red, again, S&P's down 1%. That's red. The index going down 1% is you're in a red day. And on Friday, we were down 1%. So basically down 2% in the past 72 hours. What is the catalyst to reverse and go green? I don't know. I don't see it. I don't know what would be the catalyst. I don't know why that catalyst would take place. It's a bit confusing right now in terms of how we're navigating all this. But for the markets to wake up at 9:30 and be like, oh, yeah, this is a great dip to buy, given all the stuff we talked about with natural gas, with the 10-year, yada, yada, I don't know. It feels more like a New Year's sale than anything else. Doug says holiday week could be small volumes and it would only take small buys to turn it around. Yeah, that's fair. You could argue volumes are small, and we'll find out at 9:30 how small volumes are if we get a rush of volume coming in to buy. But as of now, definitely feels like sentiment kind of sucks, and that's why we are seeing a little bit more of red. So we don't have the Tom Lee clip yet, but the headline on the clip he did today is a buying opportunity into the new year has propped up. So the most unpredictable headline by Tom Lee that a buying opportunity has popped up is the headline of his clip. We'll get his clip in a second, but there you go. Tom Lee says to buy the dip. That is his argument here. Okay, cool. Let's go to CNBC for a little bit, get some of their updates on what's going on in the pre-markets, and then we'll keep going from there. But folks, we are currently pretty red right now.
Trading under pressure this morning seem to be stocks, as you can see where we stand on the futures. Mike, these last few days, few weeks.
Dude, you can even hear it in his voice. He's sick. People are getting sick, bro. You can definitely hear it in his voice.
Really, the equal weighted S&P is down 6% for the month, and we've seen the resurgence of Mag 7.
Yeah.
Nothing surging today so far, but that has been an interesting dynamic to see as this year ends.
We rode that dynamic for a few weeks, as you say, and then that kind of buckled in the last couple of trading days. And the NASDAQ 100 names have succumbed to some, profit taking, probably some pent up selling. And I think the absence of these seasonal tailwinds to show up, and, the idea that late December is supposed to be just this kind of upside air pocket and we're going to just levitate because it's an illiquid market. And usually we do. Well, the fact that we're not doing that suggests to me people are essentially saying, why wait till January when there was generally expected to.
I agree. I think a lot of people are saying, why should I wait until January to sell if the market's tanking, quote unquote tanking? I'd rather get out at the best price I can get out at before January, regardless of the taxes you're going to have to pay. And I think that could be a reason people are saying, let me run before this thing really gets bad.
To be a little bit of a gut check moment, just because we have been up so much. The equal weighted S&P actually is back to levels from like early September.
Wow.
So really you've lost that whole
this has been a horrible month.
Trade.
I mean, 6% loss has been a very rough month.
Yes, and so a lot of that has occurred as Treasury yields have marched higher to multi-month highs. At the same time that the economic data have been okay, but they've been soft relative to expectations. So when yields are going up and it's not because the economy all of a sudden seems to be accelerating, that's sometimes an uncomfortable combination. I also think there's a sense in which we almost got trapped, or some people got trapped, by the idea that there was a playbook from 2016 after President Trump was elected the initial time to say, okay, here's what we do. We buy cyclicals, we buy small caps, yields are going to go up, but that's fine. And by the way, the markets will tend to be able to ignore perceived policy chaos or erratic decisions.
And that's not happening. The market's definitely not ignoring the potential of tariffs that are coming up, which is another random kind of headwind that the market has to deal with. And that just creates a little bit more volatility. All right, folks, we got the professor on CNBC. Let's get his take right here. So we got some red for the first time in a couple weeks. Let's see if he's embracing it or if he's saying things are getting a bit more bearish.
Auto markets, can we make it a third in 2025?
We could, but I think if you look at history, I think the only other time that we've had 220 pluses go into the third year was 1999, and whoa, then we got way too overpriced and we got to 2000. So I really think we're going to take a pause this next year.
You
One
do.
thing is true about the markets, as an old saying, is that whenever everybody expects something to happen to the market in
So I love Jeremy Siegal, but I do think 2 weeks ago when we were blistering green on a Friday, he was on the closing show and he was like, well, markets are great. We're headed for a third-year bull market. So this is, I love Siegal. He called the top in 2000, but he tends to be a little emotional on the flips. If you guys remember on August 5th, he was calling for a 75 basis point cut. Like we didn't need a 75 basis point cut, obviously. So I think, if you're feeling a little bit like, oh, the markets are red, I'm kind of scared, you're not alone, because you got professional analysts that have been doing this for 40 years that are also now saying, yep, 2025 is not going to be a bull market. This is kind of just what happens when stocks go down.
In the future, it's not going to happen. Everyone expected that, we're going to have the Santa Claus rally. Everyone said, oh yeah, it always rises between Christmas and New Year's. And I warned a few weeks ago, I said, yeah, when everyone says that, they buy up before then. And then when it comes, there's disappointment. And, I think maybe we're seeing a little bit of that right now.
Yeah, right now. Okay, but does that apply to 2025? Is there an expectation perhaps that we're going to have another strong year and therefore going to be disappointed?
I think there might be some disappointment. As time has gone on, I think the probability of a correction next year, which is defined as a 10% drop in the S&P, is getting higher. I'm not saying it's a sure thing. Nothing is a sure thing in the market. But the major forces to propel things upward, I think, have already been built in. We still have, we talk about 22 times earnings on 16, 17% gains of earnings, which is, also far higher than historical. So I see a little bit more risk on the downside, and I'm a bull on the market. I'm long term. I'm not saying sell, but I see more risks. Not as optimistic as Tom Lee was right at the end of Squawk Box, and I admire him dramatically. But I think that we have challenges next year because of all the optimism that has been.
So again, I love the professor, but I could have sworn 2 weeks ago when the markets were at 6,002 or whatever on the S&P, he was very excited and happy. I mean, a lot of this stuff you got to take with a grain of salt. Now he's calling for a 10% correction. First of all, every year we get a 10% correction. So this is not unique, calling for a 10 every single year. If you look at the markets from 1950 till 2024, we get a 10% correction at least once, sometimes multiple times a year. On a really good year like 2024, we had it once, and it was in August during the carry-in trade. Even though it was very brief, it did happen. So the idea that he's calling for a 10% correction is not unique. That's probably going to happen. The problem is, you can see in his tone, he's like really scared now. And if we reverse by the end of the day, is he still going to be scared? I think this is a lot of price action dictating sentiment more so than anything else. But nonetheless, to his point, we've got a lot of volatility coming up, and people have got to be ready to deal with it.
Built in this year.
What does that mean, Professor Siegal, for the longstanding reign of big tech? One would say those have been some key forces over the last few years that have pushed the broader S&P 500 upward.
Yeah, and we do still have a bifurcated market in the sense that, the Mag 7 being 30%, Mag 7 being 30 to 35 times earnings. The rest of the market 18 to 20, which is much more reasonable. I think 2025 could be that switch around. Now, of course, many of us thought that would happen 2024. That didn't. The narrative of AI is still very, very strong. The spending is there. It's going to bring about all these gains. Now, the amount of actual gains it's bringing about is modest. It isn't. It hasn't been implemented completely at so many firms. The hope is there. And I think ultimately it will prove to be very beneficial, but there is room for disappointment at the speed of implementation and how much that actually will affect profits. Now,
all right, let's get to Tom Lee's take before we get into the market open. Here we go.
There's nothing going on in the futures. We're down 20 points on. Tom Lee's here, Fundstrat Global Advisors, Chief Investment Officer and a CNBC contributor. This is a Grinch rally or the Grinch sell-off. This is not a Santa Claus rally. It's not going as planned, Tom.
It's not. I think investors have been a bit nervous since December 18th, the FOMC rate decision, and worried that the Fed may not be as dovish as investors previously thought. But I think fundamentals have remained intact. So to us, I think this is a bit disappointing, but it's, I think, a bit of profit taking, some hesitancy around the Fed. But I think it doesn't really change that 2025 is shaping up to have a lot of tailwinds.
So this just delays some of the continuation in a secular bull market that you've been talking about?
That's right. I mean, I think one of the lessons of 2024 has been we've seen periods of market wobbling and weakness. We know investors get pretty quick to turn bearish when that happens, but it turns out that these have all proven to be buying opportunities. I don't think there's a lot of signal to me that December's been a weak month. It is obviously disappointing because it should be a seasonally strong period, but if we end down even S&P 5,900 into year end, I don't think it just changes that in 2025. There's a lot to look forward to.
So what you thought might happen this year being put off. So what does that mean for next year? Let's say the first half of next year. What do you think we're in for? And with valuations and where multiples are right now, with all that in mind, do you think it could be a really positive first half of the year?
I do think that one of the things that we're watching most closely is what happens to CEO confidence early next year. We know they've been cautious for the last 2.5 years. It's really evident in looking at measures like the ISM manufacturing that's been below 50 since October 2022. And that's highly correlated with S&P earnings growth. I do think that that's going to finally recover to above 50, kind of signaling that we're back into an expansionary CEO mindset. It is purchasing managers. On top of that, we have an incoming administration that ultimately is going to be viewed by markets as pro-business, and I think that reignites animal spirits. And I think the Fed is going to prove to be dovish, even if they're trying to figure out where neutral is. They're still supportive of markets. It's a good combination for I think upside for equity. So, in the first half of next year, I think S&P can get close to 7,000, and that's a lot of upside from here.
7,000. You've made some prescient calls about inflation or about the markets based on inflation. Do you think recent worries that it's reheating are misplaced right now?
I do think inflation worries are misplaced. I know there's a lot of folks calling for a resurgence of inflation, and I know for whatever reason, January typically doesn't seem to be seasonally adjusted away, so we could see what looks like a surge in January CPI. But to me, the drivers of inflation are wages, and the Fed has said the labor market is not in a place that is inflationary. It's shelter, and we know shelter is really just catching up from the gap between where market prices are, which is not as inflationary, to how the statistical adjustments get CPI to where that needs to be. And we know auto insurance has really distorted CPI to the upside for the last few years, and that's cooling. So unless there is a supply shock coming.
All right, folks, here we go. Tom Lee is still bullish. 9:30 a.m. Monday, December 30th. The stock market is now open. Wake your ass up. Here we go. S&P 500 opens down 1.2% on the day. We are indeed down right here at that 587 level here on the S&P 500. Oklo right here, 2283. That one goes up a little bit. QQQ 515. That one's down 1.3% as well. So the Qs are down. Was the bell still a Temu bell today? All right, so we still got to... we still have some work to do on this Temu bell. Even the new audio setup likes the people that hate the bell. So they're the ones who are winning right now. MicroStrategy 318. Oh boy. MSTR down 3.37%. MSTR down 3.37% right here on the day. MSCR is down, Hershey's is down, Enphase is down 1.8%. Bitcoin trying to make its way back to 93, but 92,804 right now in Bitcoin. Palantir was down 4% in the pre-markets. Now it's down 2%. So it got a little bit of a reversal right here, 77.57, but it's still down. SoFi as well was down a little bit more than where it's down right now in the pre-market. So you're getting some reversals on some of these names, even though they're still down 2%. Meta, 589, Tesla, 421. Tesla continues to go down. It was at 418 in the pre-markets. Google, 191. Google's down 1.52%. Nvidia's down 1.8%. Grab is down 1.14%. CleanSpark down 3.4%. Marathon down 2.4%. Coinbase down 3%. Amazon down 1.84%. Rocket Lab down 1.93%. All of these names are down, not down as aggressively as we saw on December 20th. But they are indeed red. Robinhood right here down 3.2% on the day. MSCR continuing to get hit, 4.7% down on MicroStrategy. MicroStrategy, I think, is getting the brunt of the Bitcoin volatility. Even Coinbase is not down as badly, right? Yeah, Coinbase is only down 3%. MSCR right here is down 5%. Currently right now, 4.7%. Bitcoin 92.8. SLG is down 1.4%. Beneficial said he just bought Uber. Uber is down 1% as well. I would imagine Uber is bottoming here. Again, I think Uber's been down the past couple of weeks because of Tesla. Tesla, what do you call it? Tesla narrative around FSD versus anything fundamental. But that narrative is still one of the things that's holding Uber back right here. Down about 1% on the day. Uber at $60. Google at 191. Tesla at 422. Tesla was at 418 in the pre-markets, now at 422. So there's a green candle right there. The question is if that green candle can last or if it gets chopped up as we get into the open. Palantir 77.92, trying to get back to 78, down about 1.4% on the day. Amid the bell is as weak as Bitcoin. Yeah, the new audio setup did not help the bell. You know what I think is happening with the bell? The mic is standing up. You know how my mic used to be on a boom arm, and then it would be kind of tilted towards me. I think the positioning of the mic is the issue for the bell right now. I know it sounds like an eighth grader who is making up a new excuse for why his homework isn't completed. But at this point, it's not the audio setup because we fixed that over the weekend. It's either the bell going bearish for now that we have a red market and maybe when we get green again, it'll be good, or it's the positioning of the mic. We will eventually solve this enigmatic problem eventually. But regardless, equities are red. Nubank's a little green. And by little, I mean by 1 cent, which is more green than what we're seeing in other places. Mercado Libre's down. Intel's down. Let's go to semis. How bad are the semis today? Oh, boy. Semis are red. Semis are absolutely red. AMD's down 2%. They got a new upgrade. We'll talk about that in a second. NVIDIA's down 2%. NVIDIA's getting lower than what it was in the pre-market, so NVIDIA's actually going down now. Marvel's down, TSM's down, Dell's down 2.4%, Micron's down 2.5%. Micron has been just a horrible story, and I feel bad for it because I don't feel like their earnings execution matches where their stock price is. But these guys fell 20% last quarter, down from a high of 150, now at 86, and they're growing really nicely. It's just not enough for the street to be excited about them. Broadcom right here down 4%, ASML down 2.3%, Intel down 1.8% on the day. In terms of the Max 7, Microsoft's down 1.4%, Apple's down 1.5%, Meta's down 1.7%, Google's down 1.5%, Amazon's down 1.3%, Nvidia's down 1.8%, and Tesla is down 2.1% on the day. Archer's dumping. Let's check Archer. Oh, Archer's dumping, down 7%. Now, granted, Archer went up like 50% in the past month. So you could imagine there's going to be some volatility on a growth stock that doesn't really have earnings yet, especially if things are getting volatile. Where's Fartcoin? That's how we'll know if we're actually getting a little bearish today. Fartcoin is down 10%. Okay, there you go. So if Fartcoin was up 10%, if it was up 40%, then I wouldn't know what to do with this market. But Fartcoin's down, so you know we have some excess liquidity leaving markets. Robinhood right here, 37.96, trying to get a little reversal back to 38. It was at 37.01 in the pre-markets. There you go, right back at 38. S&P is continuing to go down. S&P's, there's a small green candle right there, but we were down 1.15 in the pre-markets. Now we're down 1.35. So the S&P is not letting up in terms of its downside. Now, why are the markets red? There's a variety of reasons for it. To summarize kind of the core reasons, the 10-year is still being stubborn, and a lot of people have been keeping up with the 10-year. The 10-year is being at 4.5%. So if you care at all about the bond market is telling us that they are not excited for risk-on assets to have momentum because they're giving you a great yield on a risk-off asset, which is the United States' debt at 4.5%. That's one of the reasons why markets are currently red. Another reason that markets are red, which is kind of what Jeremy Siegal was talking about, is this chart right here. The top 10 largest stocks in the S&P 500, this includes the Max 7, represent 40% of the index's market cap. Now, this is a really weird situation because for the past 7 months, no one has had a problem with the Max 7 being as concentrated as they were inside of the broader S&P 500, even really for the past month, other than the last week. So for the past 3.5 weeks, no one has really cared about the S&P being as concentrated. For some reason, in the past week, past 5 days, let's call it that, since Jay Powell's presser, so basically past week, the market has started to care about being top heavy. And what do I mean by being top heavy? I mean by 7 to 10 names controlling the far majority of the index. And maybe some of the volatility we're seeing right now, maybe the reason Santa Claus is not coming to town is because Santa doesn't like that 10 names were on the nice list and 490 names were on the naughty list. That was fire. That was off the top. That was off the top of my head. But so if 490 names are on the naughty list, I don't think Santa's going to reward the 10 guys or the 10 kids that were doing good. And as a result, you're seeing the market say, until we broaden out, we're not going to continue to rally. And maybe that's what's happening. Maybe that's really what's happening. And again, I don't know if that thesis is the best thesis because we've had a really good market rally this whole year by being top heavy. But for some reason, all of a sudden, I think that could be one of the fears that this broader market has. Wow, Bitcoin below 92. Holy crap. Bitcoin below 92. Goodness gracious, bro. There is no freaking support. There is no freaking support. This is bad. This is not good. Just from a Bitcoin perspective, forget the rest of the market. Bitcoin not being able to hold these levels is not good. Now, granted, this could be very short term, and we could see a reversal back to 95 intraday. We've got the next 10 hours to kind of see how that plays out. But we haven't hit 91 in a long time. I mean, the last time we hit 91,000, we just hit 91,890. The last time we hit 91,000 was not 12/20. It was November 26th. So it was over a month ago. We hit 90,000, 91,000, a little bit below 90,000. So it's been over a month since we just hit the level that we hit. But we did indeed just hit it. Michael Saylor did buy another $200 million worth of Bitcoin this morning. MSTR, I don't even want to look at that one. MSTR is down 4%, 316. That one continues to get hit right now as well. On top of that, as Chris Copa says right here in the chat, natural gas, another reason why markets are volatile, is up 17% today on increased consumption from Europe as winter starts to take place. And as a result, that, sorry, not 16%, it's up 18% right now. That is also causing issues in the equity markets right there. As you can see, WTI crude is up 1%. Brent crude is up 0.5%. Natural gas up 18% right there. That is definitely causing a little bit of weakness here in equities as well. So you got the 10-year being stubborn. You got natural gas being up way more than what I think the market expected it to be up. You've got Bitcoin not being able to hold even 92,000. And then you've got the broader market thinking, wait a second, are we too top heavy? And is it kind of ridiculous to pay $4 trillion for Apple when Apple's probably not growing enough to justify $4 trillion? That's not to say Apple's a bad company. That's not to say Apple shouldn't get a premium, but that is to say maybe the market's thinking it's not worth paying for right now. Here's another chart to kind of give a little bit of the comparison. During the dot-com bubble, the top 7 stocks were 19% of the index and 8% of the index's earnings per share. In 2024, the top 7 stocks are 35% of the index, the S&P 500, and 22% of the index's earnings per share. So if any of the Mag 7 have a bad quarter, which is another kind of risk to volatility that I think people are thinking, if any of the Mag 7 have a crappy quarter, which I don't think any of them will have a bad quarter in Q4 because it's holiday season, that could be another reason the market's thinking that could create more downside going into January versus upside. Now, to get to the more bullish side of everything that we're seeing, this could also be just a flush out for weak hands. I mean, this could be algorithms coming in, low volume. There's not a lot of people trading right now. Bitcoin's down, therefore excess liquidity is coming out of the markets, and so everything's coming down. It could just be one of those, all right, we don't really rally till the end of the year, but we have rallied a ton. And Christmas Eve, we rallied like crazy. And we're talking about Robinhood from $34 to $40 type of moves on Christmas Eve, Palantir from 70 to 79. Like maybe that was our Santa Claus rally. Maybe December 24th actually was our Santa Claus rally. And this is just a little bit of weakness towards the end of the year, but it's not anything emblematic of the rest of 2025. That could be the reason. Or we could have a lot more downside. But I think as of now, my and I made a post on Twitter last night about this. My bet would be that 12/24, that was our rally, because that was an incredible Christmas Eve, and it seems like that's when Santa Claus came to town versus today. Faraday Future, you guys are saying, is pumping. It was up 40%. It just got halted. I don't know why it was up 40%, especially on a day like this. That's kind of wild. But it just got halted right here. Went from 228 to 332. This was a meme stock that started pumping back in May when GameStop was pumping. I think they did a reverse split since then. But that one's up right now. I don't know why it's up, but that one's up 40%. The crowd says, damn it, I missed Fife again. Yeah, I missed. We missed Faraday Future so many times, dude. This thing just keeps going up. It gives everyone a chance to participate in the meme stock rally. And then like it gets halted every time people want to get in. We got some news on NVIDIA. NVIDIA just completed an acquisition today of Run.ai. Thank you, Gene, for sending me this news. I actually don't know what Run.ai does, but NVIDIA just bought them. Jensen will be speaking very soon at the CES convention, January 6th. So we're going to be hearing from him for the first time in a couple months and get his analysis of what's going on. This is Run.ai's website. Transform your AI infrastructure to run AI to accelerate development, optimize resources, and lead the race in AI innovation. It looks like a cloud computing workload optimization platform in regards to likely startups that are running a ton of training and compute. And NVIDIA has acquired them today. So M&A market already opening up. I mean, now granted, I don't think anyone's going to get mad at, I don't think the FTC is going to get mad at NVIDIA for acquiring a company like that. But still, you know, we are seeing some more acquisitions. All right, Faraday Future just got a red candle right there. It's still up 60%. It was up 80%, so it just tanked about 20% right there, as you can see on that red candle. I have no idea why this thing is running on one of the reddest days of December, but it is running. And so that red candle is slowly turning into green. That's wild, bro. That is why this is equivalent to the crypto's fart coin, right? This is like the stock market's fart coin that's just going up against the grain. I mean, I guess that's where safety is today. Faraday Future. That's where safety was today. Apple's down 1.6, Meta's down 2%, Amazon's down 1.8, Nvidia's down 0.5%, and then Tesla right here down 2.1% of the day. We are going to get Tesla Q4 deliveries on Thursday. The Wall Street consensus is 505,000. I think we get closer to 515. If we don't get to 515, I think we definitely get over 485. So my range is kind of 490 to 515. I think 505 wouldn't really surprise anybody. But that would be really good because last quarter was 463. So that's up 50,000 from last quarter. But I think we're cracking 500. And I think that would be super bullish for Tesla. Faraday Future right here up 80 or 70% now, continuing to be a safe haven for capital in the equity markets. AMD, let's talk a little bit about AMD. AMD is down 1.77%. They got a new upgrade today. SoundHound, you guys are saying, is getting crushed. Wow, SoundHound down 9.7% as well. Yeah, SoundHound's getting hit. SoundHound is getting hit. Now, they rallied really, I think they rallied 30% last week or 35%. So a lot of these names are also getting some pain as well. AMD, let's look at the AMD upgrade on this real quick because we did get an upgrade today. So for those that are interested in AMD, here's, okay, I didn't know this was this long of an upgrade. I'm not going to read the whole thing, but here you go. Northland says, we think there is significantly more upside to calendar year 2025 than risks for AMD, and they have a $175 price target. There's a lot of stuff, but just in terms of the top headline, AMD is one of our top picks. We expect AMD to continue to gain share in AI GPUs, server CPUs, PC clients as headwinds from the embedded and gaming segments abate. AMD is winning share in AI based on its roadmap and TCO. AMD has better products for server and client CPUs. And then they go on to do all the numbers on why they think they're going to beat on revenue and earnings. We are modeling embedded revenue to grow to $4 billion, up $350 million year over year. Gaming, we are modeling to be down $1.8 billion to $770 million, and gaming revenue is more likely to be flat year over year. I think the AMD argument is really simple. If you think that sentiment has gone absolutely to the bottom, I'll put the upgrade right here in the chat for those that want to read the entire report. Then any good news by Lisa Su probably takes AMD higher. The problem is if NVIDIA gets hit on earnings, which no one knows what's going to happen, but let's just say they get hit. MicroStrategy now down 5.10%. AMD to outperform NVIDIA means that their earnings are going to have to be substantially better than NVIDIA's. And we know that's not going to happen. But if their earnings are substantially better than the analyst expectations for AMD, and the analyst expectations for NVIDIA are substantially higher, aka NVIDIA has too big of a expectation to beat, then that's where I could see the over-under on AMD basically inversing NVIDIA and outperforming. Sentiment has to be crap for AMD. Sentiment has to be really good for NVIDIA. NVIDIA can do whatever they want. If they can't live up to the sentiment, they're going to crash, or at least, go down a little bit more. AMD should be able to get some room to breathe. Now, if the entire semiconductor market is getting hit, then AMD and NVIDIA, no matter how good their earnings are, if we're in a little bit of a correction, they're going to have some pain. But I think that would be a buying opportunity. I do think if NVIDIA gets back down to 100 or 110, which I don't think would happen, but let's say that does happen, that's not the worst idea in the world for NVIDIA. If AMD gets down to 100, I'd probably be a buyer. If it goes below 100, I'd probably be a buyer as well. But at 122, it's trying to see, can it find its bottom ultimately at these levels? Anybody surprised that this decline is not the elevator down with the VIX up this high? This seems like a more grueling stair step down correction. Let's check the VIX. Well, the VIX is up 15% today. It's not up like 80% like it was in August. So I do agree this could be a stair step down correction. But we are up 15. We got to see if that reverses. If that slowly is up 1 or 2% every day, then yes, I agree. It's going to be a stair step down correction versus an up 90% and then down 80% the next day, which is when you want to buy, right? Like if VIX goes up 90%, that means things get stupid and irrational. That's when you buy. But if VIX is up 10, 15%, maybe it is a slower path for things to come down a bit. Sachin says AMD has to show continuing growth acceleration for AI revenue while keeping expenses flat to create message of operating leverage. Yeah, I agree. If they can keep expenses flat and increase AI revenue with their growth estimates for EPS already at 50% year over year, then they're going to do, like in general, we're not going to have this type of sentiment on AMD because they're just going to be outperforming the crappy expectations investors have. But if AMD doesn't live up to earnings, that's going to be a bloodbath. And so at this point, I would think they have nowhere to go but up. But then again, that's the process of if these companies can bottom. Fear and greed on CNN. We're at 29 on fear. We are going down. So we are getting a little bit more volatility and we are still getting more fearful. Not at extreme fear yet. I think S&P to 570 probably gets us to extreme fear. The reason I'm saying that is because that's the level that it was at on 1220 when we had the JPOW sell-off. So if we get to extreme fear, maybe that's the logic for buying a little bit more. Where's Grab right here? Grab is 473. Grab's down 1.4%. I'll probably be buying more Grab today. Again, I'm still building up my Grab position. On Sunday night on the Future Show, I had a segment. If you go into the show and click on the chapters where I talked about Grab for like 15 minutes. I'm not going to get into it right now, but basically, I think this is not a ride-hailing company. I think this is a financial services company. And it's becoming much more apparent to me how these guys are planning to attack the 400 million people that are unbanked in Southeast Asia. So yeah, look, I like Grab here. But I will say if the market goes down 10%, Grab's going below $4. There's no question about it. So if you buy Grab here, you've got to be ready for this magical 10% pullback that tends to happen once every year. If it happens in the first couple months of the year, Grab's below $4. And there's going to be nothing to save Grab. Nothing to save anything. If NVIDIA goes down to 100, everything is getting hit. Which, by the way, NVIDIA just turned green right here, which is nice to see. So for buying any dip, much less a company like Grab that has 4 billion shares outstanding and that will be volatile in a downturn, you just got to be ready to buy the dip on anything that you buy right now. NVIDIA's green. Yeah, NVIDIA's going green. Slightly green right here. I guess investors are saying enough is enough at 134. We are piling in. You're not letting NVIDIA continue to go down. NVIDIA is the only one that's green though, right? Everything. Nubank's a little green. Nubank's up 2%. That's nice. Nubank's been hit the past couple weeks. Nubank's green. TLT, a little green as the 10-year tends to fall. Madison Square Garden stock, that's green. GameStop is green. What is going on, bro? GameStop and NVIDIA and Faraday Future are green today. Faraday Future's up 50%. What a weird combination of stocks that go green. Faraday Future, GameStop, and NVIDIA. Tess says she bought Nubank and SMR. I like Nubank at these levels. I haven't done enough due diligence on them yet, but if it stays below 11 next year, I think I'll probably grab like 1,000 shares on Nubank. I don't hate this right here. Emerging markets, their growth is phenomenal. They're getting hit with currency exchanges, Brazil's currency, et cetera. So there are some headwinds there, but those headwinds are why you're getting a better price on Nubank. But still doing some DD on it. But I do like the valuation down below $12. Nubank was at 16 for the majority of the year, up from like $5 last year. And so this is a pretty meaningful dip we're getting on it. Questions just if this is the actual bottom. NVIDIA is now up over 0.5%. So NVIDIA really going green. The market is selling off everything to buy NVIDIA. Where's the rest of the Mag 7? Are they going green at all? Nope, just NVIDIA. Tesla's down 2%, Google's down 1%, Amazon's down, Meta's down, Microsoft's down, Apple's down. None of them are really recovering either. They're still pretty much as down as they were 20 minutes ago. NVIDIA is the only one that had a legit reversal today. The only one that has had a legit reversal today right now. Rob, thank you for the $10 super chat. Amit, do you see this Grinch rally as a good buying opportunity for 2025? Look, I'm bullish on 2025. So I think all dips are exciting to buy if you get the right valuation. The problem is, and this is kind of what Tom Lee said, right? You could have a more substantial dip than what we're seeing today in 2025, just based on a billion different factors. The 10-year, inflation, Jay Powell potentially fighting with Trump, Jay Powell not lowering rates, Trump's tariffs policy is not going the right way. I mean, there's just so many unknowns, right? Is a Bitcoin reserve going to happen? Is it not going to happen? His first 100 days, is he able to extend the tax cuts? So, and I think I said this a couple of weeks ago, what I'm personally doing is just holding on to some money, just like being a little patient. I don't think this is the greatest dip in the world to buy. I think 1220 was a much better dip because we really got some, at least 5% down, which is half of a correction being 10%. But today is not really, the S&P is down 1%. It's bad, but it's not down as bad, right? So look, if you're going to buy the dip, you've just got to be ready to buy it lower. And I know that's like a true no matter what, but in this environment, it's more true than it's ever been because the markets are at all-time highs. And so 1, 2, or 3% dip is not the end of what could be a cycle of some more dips coming up with the level of unknowns that we have. The only way that doesn't happen is, okay, we get a dip, but everyone is so excited about the dip that they jump in. And as a result, we go vertical to the upside and we do a nice V shape. The problem is that's easy to do on August 5th when you get a massive dip. When Palantir goes to $20, that's when it's like, all right, this is stupid. The VIX is up 80%. This is ridiculous. When it's a slow kind of like way down, and then you get a 10% correction after like a month versus after 10 minutes, then, you kind of just have to wait. But if we saw a 10% down right now, I would say it's a buy the dip. The problem is we're not seeing that. We're seeing 2% down, 1% down, 3.5% down. NVIDIA is going freaking green. The fact that NVIDIA is going green is just showing you that there is plenty of money that's out there ready to buy, which means it's not really the best dip right here. NVIDIA usually leads the market, correct? I agree as well. Doug says, buy some dip today, but don't go all in. There's likely more dip opportunities ahead. Yeah, I agree with that. I would agree that there's probably some more opportunities in the future for dips. NVIDIA announced they are transitioning to robotics. Yes, this was a headline last night from the Financial Times. They're not really transitioning to robotics, but they are starting to bet more heavily on robotics. They've been in robotics for a long time. Jim Fan, I believe, is the guy who runs NVIDIA's humanoid robotic division. But this headline from the FT last night says, NVIDIA bets on robotics to drive future growth. U.S. chip maker is looking to new industries amid rising competition in their core AI business. Now, look, rising competition in their core AI business is a thing. It's not like the biggest thing, though. At the end of the day, Google, Amazon, Microsoft, they still have to pay the NVIDIA tax. That's not going anywhere. However, in the next couple of years, you would argue that tax is going to slow down. And that's where they need other verticals. NVIDIA has already been investing in humanoid robotics for a long time. Jensen on that conference in June had robots literally on the stage. So they've been in this market for a very long time. They've been working on this industry. Now it seems like they're going to try to take it deeper as they try to get different verticals to expand. And that's what you want to see from a company like NVIDIA. You want to see them continuously elevate and diversify. But that's bullish for robotics. That's bullish for Tesla. That's bullish for Optimus. That's bullish for robot startups like Figure, etc. It's just a question of when those truly become mainstream. Enphase is down 3.6%. Bitcoin holding on to 92,000 by a thread. Now it's back below 92, 91,000. Palantir's down 2.6. Palantir's been a champ all day. 2.6% is not horrible for Palantir. SoFi as well, holding 1550, down 2.4%. We are not really seeing a real hardcore correction in some of these growth stocks. Even Rocket Lab, I think, is only down 2%. No, sorry, Rocket Lab's down 7%. Rocket Lab's getting hit the worst. But Palantir and SoFi not getting hit as bad. Rocket Lab, but goodness gracious, dude. I don't want to check HIMS. If Rocket Labs is down 7%, where's HIMS? HIMS is down 5%. Yeah, Rocket Labs and HIMS just a bit more volatile than SoFi and Palantir when it comes to some of these growth names. Celsius as well. Where's Celsius? Yeah, Celsius 2588. What was the bottom on Celsius? 2564. Looks like that was the bottom on Celsius. Or sorry, 2523. That was on November 15th. So if it breaches 2523, we're going to make new bottoms. If not, then we potentially stay above. Look, Celsius premiums are not bad. Their put premiums are actually not horrible. The problem is, do you want to be in energy drinks? I don't. That's why I'm not selling puts on Celsius, but I could understand if someone thinks $20 is a fair price because you're getting a decent premium on it. I just really, really don't believe in the energy drink sector. Like, I think it's a good sector. I don't think it's the sector it was even 5 months ago in terms of excitement, energy, and ultimately growth that we're seeing in the broader energy drinks. Now, speaking of selling puts, I was doing some research last night. Apparently, and I didn't know this. Like, I think I knew this, but I didn't really know this. Warren Buffett had some of the biggest put premiums ever in the history of the markets. In 2008, Buffett sold $35 billion of puts on the S&P 500. I found this out last night. And he collected about $5 to $7 billion in premiums for selling those puts. And those puts were multi-year puts. So he was betting on like 5-10 years out that the S&P 500 would not be. And again, we can't do that, right? Because there's no option we can buy 5-10 years out. The most we can get is Jan 2027. So he went through the exchanges and he set up really nice structured deals for him. And like, he got the job done. There was also some European style puts that he was selling. But nonetheless, when you talk about option sellers, Buffett is one of the biggest option sellers of all time, $5 billion in premiums. And basically he was going long America. He said in the next 5 years, hopefully 2008 won't be as bad as it is today. And he was able to collect a ton of money. If not, he would have had to buy $35 billion worth of the index back in 2010. MicroStrategy right here now hitting a new low, 308.4, down 6.55%. MSTR is looking like it potentially could see the high 200s, which would be insane. If you look at this chart, it is pretty wild. It starts off the year at $43.87, goes all the way up to 540. So that's more than a 10x. And now we're at 307. If you bought at 40 and it's at 300, you can't be that upset. But we know most people did not do that. Most people bought in the 400s. And we're seeing some weakness. We're seeing some weakness on MSTR. NVIDIA's almost red. NVIDIA's fighting for... Yeah, NVIDIA just went red. All right, so NVIDIA was green for 2 seconds. Now it's red. Faraday Future is still green for some reason. Verizon's down 1%. Pfizer's down 1%. Kava's down 2%. AppLovin's down 2%. Shopify's down 2%. Open Doors down 4%. Red Cat's down 1%. Lunar's down 2%. Rocket Lab's down 7.7%. Wow, S&P 500 down 1.7%. It's looking like it wants 2% on the S&P. That means the Qs should be down 1.5. Qs are down 1.99. So Qs are down 2%. So this is legit red. This is legit continuation of Friday's red into Monday morning as the S&P and the Qs go down. Where's IWM? Small caps are down 2%. Kind of a crappy Santa Claus rally, dude. Holy crap. We are red. By the way, you know what else I did over the weekend outside of looking up when Warren Buffett bought or sold puts? I calculated my short-term capital gains tax. And I just want to know if we can write a letter to Congress, if we can like sign a petition, because this is insanity. Okay. Like this is like last night was the first night I actually calculated what the hell I owed to the government. Let me just say this. Whatever money I make that I've calculated in my head from January till April is literally going to pay off the taxes that I owe for 2025 or based on 2024, which means I will be lucky to break even in my personal net worth in the next 4 months. Because if I'm not breaking even, that means I'm taking money out of my brokerage to then pay the taxes. Like this, like, why are they taxing capital gains as ordinary income? Why are they doing that? Why are they putting me in a 30% tax bracket by adding my capital gains to my actual business? And why can't there just be a 5 or 10% flat tax on capital gains? Why am I saying this? It's not that I don't want to pay taxes. I love taxes. I love the United States. Of course, I want to contribute to the beauty of this country. But capital gains are taxing my money twice. I already paid taxes on the money that I've invested in a Robinhood. So why am I paying taxes again after I take the risk of investing in Robinhood and thankfully it works out and now I have some profits? Why am I paying a double tax on that? I don't understand that. I don't get it. That's the part I'm confused about. Why are they taxing us twice? I already paid the freaking tax. And then why are they taxing it at 30%? Why can't they just have a flat tax on any profits you get? Long-term, short-term, it doesn't matter. You're still taking a shit ton of risk in the markets. And I was reading some article last night that, short-term capital gains are because it's like a job is short-term, right? Like if you have a job and you make your salary, that is like technically short-term profits. Therefore, if you invest in equities and you sell it the next day, it's a short-term profit. The problem is when I invest in equities, I could lose all of it. I could also lose my job, but it's a lot less riskier than losing all the money within a year in the equity markets. And so this is not fun, bro. This is not fun. This is so not fun. Uncle Sam needs his money. He absolutely needs his money, but goodness, bro. I called Steve last night. I was like, Steve, I don't really like this whole taxes thing. Steve was like, you got to move to Florida. And then New Jersey's taking another 7% on top of that. So you got the feds taking 32% from me. You got the short-term taxes being basically part of my ordinary income for whatever reason Congress thought that was a good idea. And then you got New Jersey that says, hey, we're taking 7% as well. And I'm like, okay, so basically half of what I'm making in the stock market is just going away. That's basically what they're saying right now. Now I get why people don't sell. Like, what's the fucking point of selling at this point? If it's all going to the government, like at this point, why would you sell? Bitcoin, goodness gracious, look at this weakness, bro. 91.6, holy crap. Materially lower than 92, trying to hold up in the mid 91s, but it is down. Yeah, Steve said you should move to Florida or Texas or Vegas. I don't, dude. I love the East Coast. I love New Jersey. I love being close to New York. I'm willing to pay more in taxes to be in New Jersey, New York, but like this much is kind of insane, bro. I just could not understand why my short-term capital gains tax that I took a crap ton of risk to be able to achieve is part of my ordinary income. Are you kidding me? Like, what? Who came up with that idea? What bozo decided that's the right way to tax the American public? Like, that's not fun, bro. That is not fun. No capital taxes on Switzerland. Yeah, Switzerland doesn't have it. Singapore doesn't have it. Belgium doesn't have it. I mean, I love America. I don't want to live anywhere else. I want to live here forever, but shit, dude, like that's to not have to pay taxes on capital gains. Now, granted, imagine the United States said we're taking away the capital gains tax. The amount of money that would flow into equities would be astonishing because everyone would be like, holy crap, we can actually invest without worrying about all the tax liabilities. But the government's not going to do that. Because when they see Alex Karp cashing out on $1 billion of Palantir stock or Jensen Huang cashing out on $997 million of NVIDIA stock, they're going to want a piece of that. And so as a result, they're going to tax it as ordinary income and they're going to try to get 30 to 40% of as much of that money as they can. Rob, thanks for the super chat. He says, Amit, given the high capital gains tax on short term, would you say you are now oriented at holding longer 1 to 2 years? No, not really. Because like, look, if you're selling options, you're going to make your profit within a week or a month if you're correct on the direction of the option that you're selling. So regardless, if you get into the option selling game, Like I'm not buying a stock at $5 and selling it at $6 within the month. Like that's not who I am. If I'm buying Palantir or Robinhood, I'm holding it for a long time. But if I'm selling options, no matter what, you're going to have short-term capital gains. Like, because if you get $5,000 at the end of the month, that 5,000 is short-term. I don't understand why it has to be ordinary or income and put you in a higher tax bracket. I don't know why there can't be just a flat tax on that capital gain. Like, because the risk you're taking is much stronger than working at a job. I'm just saying, can we write a letter to Congress? Have people actually tried convincing them to like not be like this? Can they only tax the like insiders that are selling billions of dollars of stock at ordinary income and like let regular people not have to deal with that or something? Like, is there any compromise? This is ridiculous, bro. This is not fun. All right, we have some new updates on home sales. Let's take a look at that real quick. Housing market has been struggling for the past couple of months. Let's see what we've got here.
Pending home sales, they're out just moments ago, and Diana Olick has the report. Diana.
Well, David, pending home sales in November rose 2.2% month to month and were up 6.9% from November last year. That according to the realtors, and that is slightly better than expectations and the fourth straight month of gains. Remember, this count is based on signed contracts, so that's people out shopping in November when the average rate on the 30-year fix spent much of the month over 7% before coming down in the last week. NAR's chief economist Laura Siegal said in the release, consumers appeared to have recalibrated expectations regarding mortgage rates and are taking advantage of more available inventory. Regionally, sales fell in the Northeast month to month, but rose everywhere else, with gains the strongest in the South. Now, that may have been making up for declines in earlier months due to several hurricanes and flooding. And it looks like we will be starting the new year over 7% as well on mortgage rates. As a result, the home construction ETF, ITB, is down close to 17% month to month, on pace for its worst month since March of 2020. And David, we remember March of 2020, not so great.
No, that was not a great period.
All right, so home sales are slightly up, which is good. Not really having an impact on the broader markets. S&P, are we still down? Palantir's down 2.7. S&P is down 1.5. A little recovery. It was down almost 2%. The Qs, where are the Qs? Are we still down in the Qs? Qs are down 1.8. Yeah, nothing really. Wow, Rocket Lab. What is going on with Rocket Lab? That thing's down 8%. Holy crap. Rocket Lab's getting destroyed right here. I don't know why Rocket Lab's getting hit as badly as it's getting hit, but Rocket Lab's getting hit. This is a great name for selling puts because of the volatility, but you got to be ready to potentially get assigned on those shares because this one goes up and down 9 or 10% every other week. Grab right here down 1.56. MicroStrategy 305. Wow, MicroStrategy $4 away from going below 300 would be very psychological for MSTR. Got to give it up to Jason. Jason went short MSTR. He got a lot of shit for going short, but that short has been working out for him. He'll be on tomorrow for Technical Tuesday. On top of that, Martin Shkreli went short MSTR. I was on a Twitter Spaces with him 2 weeks ago, and he said he basically said Saylor's full of shit, and he went short. If he hasn't closed out that short, then that one's working out well for him as well right now. So you got a lot of these names kind of getting hit from the Bitcoin volatility. Palantir is holding its own though. Palantir is I mean, guys, the fact that Palantir is only at $76, it's incredible. I mean, Palantir, $174 billion market cap. We are holding on to some expensive multiples. And on a red day, bloody red day, names like Rocket Lab are down 8%, and Palantir is barely down 3%. So maybe it speaks to the strength of Palantir. It speaks to the strength of diamond hand shareholders. It speaks to the strength of institutions willing to buy a dip. But Palantir holding on very nicely, even with the volatility that we're seeing. And I do think we're going to close above 70 this year, hopefully above 75, but looks like definitely above 70. Enphase right here down 4.49%. Google's down 1.23%. SoFi's down 3%. Meta's down 2%. Tesla's down 3.5%. Wow. Tesla is $6 away from going back to the levels it was at on 12/20 when it quote unquote bottomed during the J-Pow presser sell-off. So Tesla, it made a full U-trip or round trip from 410 to 455 last week on Christmas Eve, back down to 416. So Tesla has had their issues. Oh, sorry, it got to 463 on December 26th. It was almost at 470. Now back here at 416. CleanSpark down 6%, Amazon down 2%, Apple down 1.5%, Netflix down 2%, SMCI down 5%, Adobe down 1.4%. Adobe's been a mess since earnings. Intel's down another 2%. Intel below 20. Mercado Libre down 1.4%. Costco's down 2%, below 1,000. Rivian's down 5%. Reddit's down 5.5%. Joby's down 9%. Grindr holding its own. Grindr, dude, Grinder's not going down on a red day. It doesn't go super up when it's green. It just kind of chills out at $17. But Grinder's down about 1%. GameStop's now down. And Faraday Future is the only thing that's safe, up 52%. This is wild. This is absolutely wild. What a crappy end of year, dude. Either tomorrow it's going to reverse and we're going freaking back to the moon to end out the year, or we have a really shitty end of the year and it goes red. And it looks like it's the latter right now. NVIDIA right here, 137.70 right now. Doug says, Amit, how are people surprised with the MSTR thing? It went from 115 to 544 in 3 months. A retrace to 200 shouldn't surprise anyone. You are right. Technically, it shouldn't surprise anyone. The problem is no one really cares. Same thing with, so this is what I've been thinking about Palantir as well. If Palantir goes to 40, right, and we get like a 35 or 45% correction, for the OGs of this community, would it really surprise you? I don't think so. Because you would be upset, you would be a bit annoyed, but you know that the valuation's extended, and if it does go back down, it would be a great buying opportunity, yada, yada, yada. However, to the majority of the investing public, if Palantir goes from 80 to 40, they're going to say it's the worst thing in the world, right? And that's going to be the mainstream narrative, all the headlines, all the CNBC articles, because it doesn't matter what the fair value is or in extrinsic value, whatever. As long as there's a massive decline or a massive move to the upside, people cover it. So it is what it is if Palantir goes down. But the thing is, most of us that are holding the stock know that this is a real company. MicroStrategy going down 50% is different, even though it's up 10x this year after being down 50%, which is crazy, because MicroStrategy people think of as a Ponzi. And that's the difference. The public perception of MicroStrategy is that this is a Ponzi scheme waiting to blow up. And so when MicroStrategy takes a 50% downside hit, even though it probably was warranted because it ran up too quickly, everyone screams Ponzi. And if it can't recover, the Ponzi narrative continues to compound. Like for all of us that think MicroStrategy is not a Ponzi, which I know a lot of you in the chat do think it is a Ponzi. Some of you guys don't think it's a Ponzi. You're in a bubble, right? You're in your own little bubble of people that actually listen to Michael Saylor talk for hours on a podcast. The far majority of people don't give a shit. They just hear some guy who's borrowing money for free and leveraging up on Bitcoin, which is the most volatile asset in the world. They think it's a Ponzi. And the question then just becomes, how does the mainstream media ultimately cover it if it does go down as badly as it could go down? Pat, thank you for the €5. Amit, what is your opinion on Oscar Health? I think you once explained why it's not for you. I don't think I've ever done DD on Oscar Health. Yeah, I don't know, but I'll put this on my list. I have no idea what this company is. $3.3 billion market cap. Obviously not profitable, it looks like. I'll put it on the list. I have not looked at the stock ever, so I'll put it on the list. Oscar Health. I'll write that down right now. And we'll take a look at that one later. Let me just see their performance year to date. OSCR stock year to date. It's been a good year, up 50%. It looks like they did something right this year. All right, we'll take a look at this. Healthcare is going to be an emerging sector with AI that definitely gets a tailwind, I think, from more AI embedded workflows inside of hospitals. So we'll take a look at Oscar Health and see if there's anything there. S&P down 1.5, Celsius down 2%, HIMS is down 5, Palantir is down 2.83, Qs are recovering a little bit. Qs were down 1.9, now they're down 1.6. IWM was down 2, now it's down 1.75. And NVIDIA up 1% for some reason. NVIDIA being the lone warrior taking on the market and going green. That's what you got for NVIDIA. Let me see if there was any other macro data besides the housing market data, which wasn't horrible. Hong Kong has some more trade deficits that widened in November, 43.4 billion. That's up from 27.9 billion. That is a decent amount. Canada's small business sentiment has grown. It's up to 56.4, which is better than, which is the best since mid-2022. So that's good for Canada. And Chicago PMI, which is their business barometer, dropped further from 40 to 36. That could be another reason we're seeing some volatility, because that's one of the PMI stats that the market cares about. So that could be another reason. I mean, that Tom Lee was talking about CEO sentiment surveys that are going to be out in a couple weeks. That's also going to be very important. If CEOs are feeling confident and comfortable, they are willing to take more risks, potentially go public. Archer down 10% right here. Do more M&A, spend more capital, hire more employees, etc. If CEOs are not feeling confident about the economy, that's where you have executives make tough decisions around layoffs, around not expanding, sacrificing growth initiatives for saving jobs potentially. And that's where you get a little bit more of a crappier environment to trade in. Wow, markets are closed January 9th in observance of national holiday for Jimmy Carter. Huh. It looks like Biden just made January 9th a national holiday for Jimmy Carter's life. Okay, so markets are closed on January 9th. There you go. If that headline is correct, January 9th, 2 Thursdays from now, markets will be closed, and that will be a national holiday. Maybe that's a one-time thing. Maybe that's not an every year type of thing. But if that is a every year type of thing, then we are closed January 9th. Tesla did not report delivery numbers yet. That'll be on Thursday. Delivery numbers. That'll be on Thursday. Market is expecting 505,000. But we don't have those numbers yet. Okay, let's finish up what Siegal was saying, because we didn't finish up his segment. I think we have like a minute left on what he was trying to get at. So let's finish up his take for 2025, and then we'll keep going from there.
Will it happen in 2025 or not? Listen, history tells us that narratives go on much longer. They need to be punched down with many failures before they're finally dead. You know, at this particular point, that trend is in. But you know, I'm looking at January, thinking, hey, that might be a reversal. That big buildup that you know, that Mike talked about, that we got from Thanksgiving up until a week ago in the Mag 7, we really might find that you know, revert at least down to the trend line that was established you know, in September and October. So we might see a reversal earlier. And then we have the challenges that Mike and everyone has been talking about. What is going to happen to tariff policy? What's going to happen with immigration policy, et cetera, and so on. I mean, there's a lot of positive aspects. We also have to remember, in terms of, you know, we see the Republicans did capture the House, but by 1 or 2 votes. Some of the things are not going to come maybe as easily as everyone thought on November 5th with the election. I do think you know, they're going to work on the taxes and get that set in the as an important priority, certainly in the first 2 years of the Trump administration.
Yeah, which is most likely to take the form of, you know, extension of the current tax structure, Professor Siegal. This is Mike here, and you know, how does the Fed filter in? That was one aspect of the script that seemed to get scrambled here. On the one hand, probably less easing as inflation is sticky and policies uncertain. On the other hand, you know, nothing necessarily wrong with the Fed, you know, kind of tweaking rates lower a few times and then going on hold. That's what happened in 95, 96.
Yeah, and you know, a lot of people have been criticizing the Fed. I think the Fed has been right. Listen, the normal situation, as you know, Mike, is that long-term rates are above short-term rates. And we were in inversion for 2.5, almost 3 years, almost the longest in history. And by bringing short-term rates down, we finally have the 10-year above Fed funds, which we didn't have for 3 years. And normally, actually, it's more above Fed funds than it is right now. Mm-hmm. So I'm not criticizing the future of the past 100 basis points, but I do agree, you know, at most 1 or 2 next year, depending on the strength. And, you know, if it's going to be.
I disagree, dude. The fact that Siegel's thinking we get at most 1 or 2 cuts next year, I disagree. I don't think that's happening. Like, it's pretty obvious in the data. Shelter will come down. Automotive parts will come down. We're going to get 3 to 4 cuts. We are not getting 1 or 2. And so I don't know. I disagree with the professor here. It seems like he's just deciding that we're only going to get 2 cuts. We have a long year left. Inflation is going to come down. And if it comes down substantially, we're getting much more than 2 cuts. I mean, the interest alone that we're paying is $1 trillion a year. Like, we are going to get these rates to come down so we can at least stop paying as much on debt. And I don't think inflation is exploding to 10% like it did 2 years ago.
much less than 2, that's going to be
Right.
the result of softness.
Professor Siegal, we're going to end it there. Always appreciate you joining us.
I think he's wrong. I do not think we're getting 2 cuts next year. I think it's much more than that. I think it's much more. Bitcoin, lowest levels in over a month, 91,380. Goodness gracious. MSTR holding on to 300 by $3.89 right now. If Shelter comes down, we are going to get 3 to 4 cuts. The problem is for Shelter to come down, rates have to come down because then the 10-year will come down, which means mortgage rates will come down, which means people will finally start buying and selling their houses, which will allow for more competition in the housing market, which will get housing prices to come down. And the problem is if J-Pow doesn't lower rates, then that can't happen. So it's kind of like J-Pow's got to flinch first for the rest of the market to flinch. But if he's not willing to flinch, the market's not going to flinch. And that's where Siegal could be correct, that we only get 2 cuts. But I think J-Pow knows that there's no way the 10-year comes down unless we actually have rates continue to come down far below where they are right now. And so I guess we're set up for another 5 months of this push and pull game with inflation, just like we were back in 2024, earlier this year. I mean, the first 5 months of 2024 were basically, is inflation coming down or not? And will that lead to a rate cut? And we didn't get that rate cut until September. So it took 9 months to even get to the point of getting a rate cut this year. But the markets were priced for a rate cut the whole year, which is why markets kept going up. And then finally, J-Pow gave it to us. But it looks like we're going to have another 5 months of pushing and pulling on if we get a rate cut or not. And I guess we're going to have to see. Marathon's under 17. Holy crap. Marathon. Oh boy. 1696 down 8%. What a candle. What a candle. Again, guys, this is why I like Hood as a crypto play. Hood's down 2.6% today. That's bad, but it's not down 9%. It's not down 8%. And that's because some of these other Bitcoin names are just way too tied to the price of Bitcoin. Coinbase right here down 6.2%. Coinbase, I like the company, but if Bitcoin goes down, they're screwed. It's just that simple. A lot of these names, the volatility to the upside is great. The volatility to the downside sucks when Bitcoin starts having some fear. And then the miners, I mean, don't get me started on the miners. These miners have been just god awful. CleanSpark right here down 7%. None of them have been working well. Riot is down 8%. That's a nasty decline as well. Okay, here's a question. Let's do a poll on this. Let's see. I'm very curious what you guys say on this. First of all, the 58% of you voted that we will continue red throughout the day. 42% said we'll reverse. We have another 5 hours left. Let's see what happens there. Here's the poll. Here's the new poll. Simple question. Think carefully before you answer yes or no. Here's the question. Ready? Here we go. Has Bitcoin topped? That is the question. Has Bitcoin topped for the cycle, for the current cycle? Let's see. Let's see what people say. Let's see how bearish people are on Bitcoin. I don't think it has. That's my answer. I don't think it has. I said that last night. I've been saying that for the past couple of weeks as we've been seeing volatility. I don't think it's topped, but we've got some volatility, and people like our good friend Tom Lee a couple of weeks ago, they did a podcast and they don't think it's topped, but they definitely think there's going to be some volatility before we get to the promised land of 200K. Here's what Tom Lee said a couple of weeks ago.
Because you're Mr. Prediction and you're Mr. Accurate. It's a year from now. We're celebrating Thanksgiving dinner, and both of us hopefully will have a lot to be thankful for, knock on wood. Where is Bitcoin 1 year from now?
Bitcoin 1 year from now, I think is something around 250,000.
250. Okay. So it's early then. If you could buy a stock at 10 and in a year it could trade to 25, that's a pretty good investment, right?
Yeah, very good. And but knowing that it is hyper volatile,
right. People don't like the volatility. I understand.
Yeah, Mark Newton, our technician, thinks that the cycle of Bitcoin turns a little bit down early next year. So maybe Bitcoin gets to the 60s, 60s before 250.
Mm-hmm. Yeah, I can see that. Let me pin you because you're Mr. Prediction.
So you got Tom Lee saying, look, I think we go to 250, but I think we go to 60 before we get to 250. Results on the poll, 66% of you say no, Bitcoin is not topped. 34% of you say yes, Bitcoin has topped. So we got, let's call it 65-35 right here on the yes and the no's. So still a majority of people believing Bitcoin is not topped out for the cycle, but obviously we do have some volatility that we're seeing on Bitcoin. MicroStrategy really trying to hold on to 300. It's like fighting for its life at 302. But the downside does look like it's coming. That means MSTX must be getting destroyed. MSTX is down 16% in a day. It's not going to be fun for the option sellers on MSTX. MSTY is at 27. This is the yield max one that has a ridiculous dividend they pay you every month, but they're paying you that dividend because of the price of volatility. And MicroStrategy, we've seen, obviously, is very volatile. That one's down 7% on the day. And then Palantir, down 3%. Palantir holding on. Qs are still going down. So the Qs tried to reverse. They were down 2%, and then they went to 1.5. Now they're back down to 2%. That means the S&P is probably back down as well. Yeah, S&P is back down as well. It was at 1.7, went to 1.5, now back to 1.7. So really no one's coming in and stepping in to buy the dip. No one is coming in yet. Raul says Bitcoin's going above 150, but right now it will test mid-80s via technicals. Ethan says MSTX looks like the most speculative thing ever. It is. I mean, it's a double leveraged MSTR, and MSTR is quadruple leveraged Bitcoin. So the premiums on puts are amazing. I mean, dude, they pay you like 10% a week. That's like 40% a month. Like, that's insanity. But if you get into the contract and you decide to play with them, you got to realize that they could stab you in the back, and MSTR could fall, and those put premiums you're getting are irrelevant compared to the depreciation on the asset itself. So this is the thing that is the tricky part about option selling, is like, you've got to be really disciplined to not get into contracts with companies that A, you don't care about. No one cares about MSTX if they're trading it. They're literally just trading it. But B, are you ready to handle the volatility to the downside? Because that's when the puts actually get assigned, and it's not even that easy to roll them. When your puts go down, when the stock goes down 20-30%, rolling it means you're attaching 8 to 10 months of time value, because that's the only way you get the extrinsic value enough to make good on the roll. And you might not even be getting a credit. You might just be filling up the debit that you have to pay to get out of the contract, which means now that those shares are just stuck for the next year, all because you decided you wanted to get a 10% premium in a month, which probably wasn't realistic anyway, because most premiums are averaging 1.5 to 2%. So if you get into the option selling business, which, I plan to get in more aggressively next year. I know a lot of you guys are interested in option selling as well. But one thing to make sure of is that you don't dance with some of these stocks that are aggressive in their premiums, but aggressive in their volatility. And if you do dance with them, just be super conservative. Like, instead of having a put price at 50, have a put price at 20, or at 35, or like, just be ultra aggressive to the point where if you actually have to own the shares, you kind of would be happy, because you would think that it's got so oversold. But if you sell puts at the money on these volatile names and then they go down, the premiums are great, but the share appreciation is not going to be as good. Nubank is up 3%. Nubank's an outperformer. Rocket Labs down 7%. Celsius is down 2%. Nvidia just went red again after going green 3 times today. HIMS is down 4.5. Hood is down 2.34. Hood with a little recovery right above 38. SoFi 1553. And then Bitcoin still above 91,000 right now. Would you let your Hood options expire or close it early? So my plan is to close them again on January 2nd. Again, the Hood options are just really in the money, right? 25 strike. Right now we're at 38. Here's the thing. Let's say Robin had tanked all the way to 30, right? Like tomorrow or something. Let's say that happened, or by January 2nd. The time value on the option is January 17th. So there's going to be 2 weeks left going into January. I'll still get pretty much max value for them. At this point, they're just so deep in the money that Hood would have to collapse to, like, literally below $25 for those to be substantially lower than where they are right now in terms of their full value of the spread. So if we hold 38, 37, if we maybe decline to 34, 35, which maybe it happens tomorrow if we get some massive decline, I should be able to get out of the options pretty easily on January 2nd. And that is the plan. I mean, even right now, I'm looking at the options right now. There's 2 set of options. One of them is 95% of the max value of the spread. The other one, let me do the math real quick, is 98% of the max value of the spread, even though HOOD's down 2%. Because at this point, they're so deep in the money and the time that's left on the contracts, basically my theta decay is so substantial because we only have a couple weeks left, that the market's thinking the odds of Robinhood going back into the 20s is just low at this point. So I'm very lucky to the point where, the options are deep in the money because Robinhood has executed so well. And although I wanted 25, Vlad gave me 38, which is really helping my options. And I should be able to get the max value everything in a couple days. But if my options were at like 35 or 36, right? If I went really out of the money, I would be in a tough situation right here. And I'd probably be selling, even regardless of the taxes. I'd probably be selling. Because at that point, you just never know what could happen within a couple percentage points of the ticker. Amid, if Bitcoin is going to drop, do you think there's a better entry into HOOD to come? I think there's going to be a better entry to HOOD if Bitcoin and the market takes a tumble. So if we see Bitcoin, at 80,000, if we see S&P 500 at 550, Robinhood's probably going to be in the high 20s, which is going to be a fantastic entry in my opinion. But we got to see if that happens. So I wouldn't hate to get a 10% correction because I would love to get more Robinhood, particularly at those levels. And there would be other names that probably be on a discount. The question is just, do you have the cash, bro? That's the problem. Every time there's a dip, people don't have the cash. That's the problem. And I think hopefully all of us have a little bit of cash on the sidelines. If we get a dip, which maybe it happens, maybe it doesn't, but if we get it, then we can actually go shopping. Like on August 5th, I wasn't going shopping. I was like finding pennies underneath my mattress to try to go shopping. It wasn't an enjoyable experience. It was just like, do I have any money that I can use to buy this dip? But hopefully if we get a dip, I can actually, not just go window shopping. It's like a legit chance to buy the dip. So yeah, I think Robinhood will get hit if Bitcoin falls and the markets fall, but it's not going to get hit as bad as MSTR, right? And we're seeing that today. Bitcoin's down substantially. Robinhood's down 2.5%. MSTR, Coinbase, etc., down 7 to 8% right now. Is today a dip? It's definitely a dip. I don't know if it's the most exciting dip. S&P down 2% is undoubtedly a dip. That cannot be denied. The question is it the beginning of a dippy dip or is it a small dip that gets eaten up? And that's what we're going to have to see over the next couple of days. I think with all the unknowns and volatility, it's definitely not the dip to go balls deep in. It's, you can buy a little if you feel like you want to get some exposure, but like I'm not buying Robinhood at 38. Like I'm not doing it. Like if it wants me to get back in, go below 35 because I'm not, there's not a dip to me at this point. Like we got to really see something come down for me to get excited. Someone asked about the New York City meetup. Okay, so let me do that real quick. So there is a date for the New York City meetup and I put a Google Forms right here in the chat. We're going to be doing January 18th. That is tentative, January 18th. I will confirm that in a week, but January 18th, that is a Saturday. Call it 12 p.m. to like 7 p.m. I'll be there early in the morning. And it's most likely going to be in Bryant Park in New York City. That form, if you're going, please fill it out if you can make it. It's a really quick form. Just ask for your name, your phone number, if you're local to New York City, and how you discovered the channel. And I will be putting your phone number in a group chat on Telegram, and I'll be sending updates from there. So January 18th, first meetup of the year, New York City, Bryant Park. It looks like that's what we're going to do. And then based on how many people show up, we can see what we do, right? If like 5 people show up, we could definitely do like a happy hour or something. If there's like 100 people, which I don't think there's going to be 100 people, but let's say there's a lot more people, it'll be hard to do a happy hour, but we'll see where the day goes, right? Bryant Park will start it off. It'll be a nice space. Everyone can meet open in that area. And then if people want to go off and get drinks or something, we can see what we have to do. So it'll be a fun day, but January 18th, that'll be the first day for the meetup in New York City. And then February, Bay Area. I'll give more updates on that. But February, Palo Alto, Berkeley, we will be there for all the people on the West Coast. Coinbase down 5%, Riot down 8%, CleanSpark down 6%, Bitcoin right here down 1.64% currently on the day. You do not sign up on Grindr. Goodness gracious. By the way, I don't care. I'm going to say this right now. It's not going to help the Grindr accusations go down. I said this last night on the Sunday show. I have no fear of saying it today, this morning. I got a manicure and pedicure over the weekend, bro. I got a mani-pedi. Look at these nails, bro. Look at these freaking nails. I didn't know there was such a thing called clear nail polish. She was like, do you want me to paint it clear? I was like, what? You can paint it clear. They're glowing. They're glowing. These fucking nails are glowing, bro. Like, I think any guy who thinks this is gay, you should reevaluate. Think about your hygiene, because my nails were disgusting, and now my nails look beautiful. They look fabulous, to be honest. And get a manicure and pedicure, dude. It's $30. It's not bad. Most guys have disgusting nails, disgusting toenails. Like, getting a manicure, pedicure, it feels good. It really feels good. It's really worth the money. It's absolutely worth the money. It's not for my grinder date, dude. It's like I honestly, I just feel more clean, bro. And every time I look at my nails, they're freaking glowing, dude. Like, they're glowing. That is insanity for your nails to be glowing. I didn't know there was such a thing called clear nail polish. You can paint your nails clear. What the heck is that? But I learned that over the break. So there you go. It's good, dude. I'm serious. The hygiene of feeling like your nails are clean is definitely worth it. At least in my opinion. Maybe we get manicures and pedicures at New York. No, I'm just kidding. We're not. Because in New York, first of all, it would cost like $150 to get a manicure and pedicure. It'd be ridiculous. So we're not doing that. But still, it would it'll be nice to meet up and it'll be fun. We can definitely do a bunch of different things. All right, let's get some other updates that we have right now. We have some updates on Trump and Congress voting on the Speaker of the House today. That's going to be interesting. So we have to look at what happens there. Let's go to that right now. We got Trump getting inaugurated in 3 weeks. So the inauguration and the swearing-in ceremony is coming up very soon.
Let's get over to Emily Wilkins. She has some news for us involving, I believe, the Speaker of the House. Emily.
Hey, David. Yes, of course, Mike Johnson is going to be facing a battle for his speakership this Friday. His lawmakers will have to reelect him. You remember how that went last time for Kevin McCarthy. But Mike Johnson now has gotten a lifeline from President-elect Donald Trump, posting to Truth Social just moments ago, telling Republicans to not blow this great opportunity that we have been given. He said the American people need immediate relief from the Biden administration and calls Speaker Mike Johnson a good, hardworking, religious man. Trump says he will do the right thing and we will continue to win. Mike has my complete and total endorsement. Now, at this point, we only know of one lawmaker, Thomas Massey, who said that he absolutely will be voting against Johnson when it comes to the vote on Friday. But we know that there are at least a dozen other lawmakers who have spoken out about their frustrations with Johnson, the fact that he's had to go to Democrats so many times to get various things done. They're worried that he's not paying enough attention to his conference, and they are looking into potentially other speakers. I mean, we saw Steve Scalise, Jim Jordan throw their hats in the ring last time. Of course, at this point, both of those individuals are behind Johnson. It does seem like Johnson's the one who is most likely to get the 218 that is going to be needed. But we will see exactly what happens on Friday. But at least for Mike Johnson right now, he's got to be feeling good with that endorsement now from Trump.
If Mike Johnson does not become the Speaker of the House, there is going to be turmoil inside of the Republican Party. That's why Trump probably just gave him an endorsement. Bitcoin right there, 91,700. Because if you have continued infighting inside of the Republican Party, that's not going to be good for a new term where the party should be basically, connected together and they should believe in each other and not fighting with each other. So that's going to be important. We'll see if Speaker Johnson does get confirmed again. It does look like he will be the Speaker of the House once again, but that is another level of volatility we have to watch out. And why does that affect markets? Well, if the Republicans don't have a Speaker of the House they can agree on, you've got uncertainty. And you need a Speaker of the House to get any policy passed. So you've got to agree on that first. And only then can we get the tax cuts passed or the tax cuts extended or the tariffs or whatever it may be. And so those are definitely things that we're going to be looking at. Nubank right here up 4% on the day. So Nubank having a great day. Rocket Lab still down 6%. HIMS is down 3%. Celsius down 3%. Hood down 2%. Bitcoin 91,828. Bitcoin making a little recovery, trying to make it way back to 92,000. MSTR as well at 308, up from 302 currently just now. Shimon said he bought MicroStrategy, right? I ran an IBIT. Who's buying today? Is anyone buying? Put in the chat. Is anyone buying? Mythlesh is Grindr a buy right now? Look, I like Grindr. I think it's going to do well. I don't want to say it's a buy because you have to be able to understand the thesis, but Grindr to me is a monopoly on gay dating. That's it. It's a very simple thesis, and that's why I like it here. Is it a little extended? Yeah, I could probably I would sell puts on it, to be honest, at like 15, 16. I wouldn't really buy the stock outright. It's been very resilient, though, through the midst of the volatility. I mean, it's been very, so it's but it's kind of a name that doesn't have a lot of volume either. So you don't have a lot of people trading it up or down. But I like it. I have 1,500 shares. I'm probably going to hold it for the next couple of years, and I think they outperform. But I would just sell puts to get into it. I wouldn't really buy the stock right here. Jake says Grindr is not a monopoly. Gay dating exists on Tinder and Hinge and Bumble. Yes, you're right. But if you actually did some research on those apps, it is not a space for gay people to actually connect. It's just not. That's why Grindr has 14 million monthly actives and growing. That's what people get wrong about the Grindr thesis. They think that it's on Tinder. It's like, yeah, it's on Tinder, but it's not the type of community network that Grindr is built. And so that's the difference. At least that's my interpretation of the thesis long term. Okay, so Jeff said he bought more AMD. Matt said he bought more Square. J Duff bought more AMD. Ed bought more TSLL. Where's TSLL? That one's got to be getting hit, right? Yeah, that one's down 5%, even though this one's up really nicely this year. TSLL year to date is up. It's got to be over 100%, 110%. So that one, you are seeing a dip right there. Karan bought more Google today. Pascal's buying SLB. I like Schlumberger. I'm listening more to Steve's thesis on it. I think it makes sense. You get a nice divvy on it. And they do not, they do oil servicing. So they're not like pumping the oil like Exxon. They're helping companies like Exxon do better at actually servicing the oil, which is why they're a little bit more in a better situation than some of the other oil and natural gas companies. So I think there is a thesis there. Beneficial said he bought Uber and Google and maybe some SoFi. Okay. Inked says he's buying Grab. 01 bought Hood. I don't hate it at 38, especially if Bitcoin recovers. Rob says he bought MicroStrategy. All right, so people are buying. People are definitely buying today. At least some of these names are getting bought. Ash bought Tesla at 418. Where's Tesla? Are we still below 418? We're at 421. All right, so 415.75 so far today was the bottom. We're back above that at 421. But it looks like 418 was not a horrible buy so far today. SoFi, Square. All right, some of the same names that people are buying. Nike. Where's Nike right now? Nike. Wow, Nike's down 2%. Yeah, Nike has been getting hit all year at this point. I wonder if Ackman is still long 16 million shares, bro. I wonder if we're not going to find out for like another 2 months, but I really wonder if he reduced his position or if he doubled down on it. If he reduced his position, then Nike was like such a random trade for him. And he doesn't really trade. He tends to go long. So I wouldn't have expected him to get out of his position. But if he did, then a lot of people that have followed him into it are not going to be fans of Nike anymore. NVIDIA right here, still green. NVIDIA, one of the only tech stocks that's green today. NVIDIA, Nubank, and Faraday Future are green. Is GameStop green? GameStop is green. NVIDIA, Faraday Future, and GameStop are green on the day. That is currently the state of the markets that we're at right now. Absolutely wild markets right here. Thinking about adding to TLT at these levels. Look, I don't hate TLT here, but we've really got to see yields come down for TLT to actually get back into the 90s and 100s. And I think yields are going to come down, so I don't hate TLT. I don't know how stubborn the 10-year is going to try to be about them. Because right now, it is absolutely being stubborn. This damn thing is not coming down. And, J-Pound and the Fed are mad about this because they've done their job by cutting rates 4 times this year. So, or like 25 bips decline. So you got 100 basis points of cuts. J-Pow's looking at the 10-year like, hey, we've done our job. Like, why aren't you guys capitulating? And the 10-year is like, because we don't think inflation's gone. And as long as they don't think inflation's gone, you're going to continue to see some of this volatility. What else do we have here? Seems like that's most of the headlines that we're looking at right now. Is it just me, or does it feel like yields are topping out here? I hope yields are topping out here. Yeah, the Fed obviously doesn't control the long end. Agreed. The Fed, but still, with rates coming down, the Fed's looking at this 10-year like, what's going on, bro? It's time for you to come down. Bitcoin right here, 92,000. So back above 92, maybe 91.4 was the bottom, maybe. Well, we're going to see. Didn't Ackman invest in Sony Music? Yeah, no. So it was a Universal Ackman invested in. However, he tried to take Universal public through a SPAC a couple years ago, and that didn't work. If you guys look up Bill Ackman Universal Music presentation, he did like a couple, I think like a 2-hour presentation on Universal Music, and he's super bullish on it. I still think the company owns shares of Universal Music on European exchanges, but they tried to take it public in the US markets, which I think would have been a big name. Universal Music has Drake, Justin Bieber, Taylor Swift, like all the big superstars are underneath Universal. So it's a massive company with intellectual property that is probably more valuable, one could argue, than, dare I say, NVIDIA, because music is emotional, music is timeless, and I'm being a little hyperbolic here, but you get my point, right? Like that intellectual property of music is I mean, like Michael Jackson's, like Prince's music, that music is there forever. And so what is that worth? It's worth a lot of money, but he was unable to take them public. He was unable. A lot of things got in the way of him trying to go public. I think the SEC also didn't like how he was structuring the SPAC, and so they shut it down as well. So there was a bunch of issues he had, but he wasn't able to get it to go public. And if he did, I think that would be a long-term holding for a lot of people, definitely in the Pershing Square Fund as well. Music is going to get replaced by AI. Well, that is a fair argument. I think it's going to be tough. You know, here's the thing about AI that I've been thinking about. I think anything super creative, AI is not at the point yet where it's literally replacing. Like, it's a bit hard for AI to replace a vlogger on YouTuber, right? Because you have a personal connection with them. It's a bit hard for AI to replace an author. I mean, AI can write books, but we can tell. Anytime I read a tweet that's like, there are people on the financial part of Twitter that will ask ChatGPT to give them a 5-paragraph analysis of NVIDIA, and they'll copy and paste that and post it as their tweet. And like, you can obviously tell this is not an original idea or anyone meaningfully typing up their thoughts on NVIDIA. So I think from a storytelling perspective, AI still sucks. And then from a music perspective, AI is not there yet, right? It's good, but it's not like replicating major artists and hit albums. If that happens in the next 10 years, there is a legitimate case that anyone in the content creation or entertainment business is going to have some trouble if people start trusting AI for their news and their information versus individual people. But I think we are a little bit away from seeing if that could happen. Some of you guys are saying Squid Game rules. So again, I watched season 2. I thought it was horrible. A lot of people agree with me, but you know, there might be people that disagree with me as well. From the majority of the music and TV show reviewers I've seen on YouTube, most of them are saying it was a disappointment. And I would have to agree, dude. Ending sucked. Storylines sucked. The plot sucked. Like all of it. I just didn't enjoy it. But for those that did enjoy it, hopefully you got to engage in the fun of the memes that are coming out from Squid Game. But it was, I really had big expectations for the show, and I did not get it. Now, we did get this one meme that's going viral right here that Arnie has done a good job memifying. So the guy who has to take a selfie in the second season, as you can see, he's more upset than in the first season. And this is Palantir Bears. That's what Arnie said. This is Palantir Bears. They're smiling at 8, and they are not smiling at 80. And then here's another meme from Squid Game that was funny. When people say Palantir is not a cult, Squid Game is a cult, bro. Like the guys who are in the Squid Game that are like making the games actually function, 100,000% a cult. Absolutely a cult. Doug says, Amit, Netflix can't make a season 2 of anything. They wait multiple years, so the creative teams are all different. Yeah, and I heard that the director only came back because of money. Like, the director built Squid Game as a passion project, and obviously the thing took off, and it was like his dream to get a show out into the world. But then season 2 was not a passion project. It was, hey, here's a lot of money. Can you make another season? And that's usually when shows tend to do bad. When the passion's gone, when the energy is gone, it tends to just suck. And that's what we got for season 2. All right, let's get some more updates from the suits in terms of what's going on around the markets, and then we'll keep going from there. Rumble's getting wrecked. Is Rumble hit? Where's Rumble? Rumble, wow, yeah, down 10%. Now, Rumble was up 100% last week, so you're probably happy if you bought it at $7, but it is down 10% right here.
we're all
Quite a
having
lot
to work
going
this
on.
week here, but look, this isn't very pleasant. But there is a basic thing that's going on here. First, this morning we saw a sell program come in. You saw the flight to bonds that we saw earlier on, but we are still getting seasonally light volume. I know this is not pleasant to see things go down, whether it's heavy or light volume, but that's what it is. The last time we had an actually really notable up volume day was December 20th, and that was the rebalancing. And since then, it's been seasonally light. Remember, it's still not comfortable, but take a look at the major sectors here. Basically, everything's down about 1.5%. Energy's the one little exception here, but consumer discretionary, tech, industrials, communication services. Here's where these are not that useful anymore. When you have this tyranny of big cap tech, when you get a big cap tech sell-off, it drops all of these sectors. So just take a look at the major big cap tech. It doesn't matter here if you can have Apple and you can have Meta in the technology sector, and you can have Alphabet and Tesla sitting out there. Alphabet's in communication services, but Tesla and Amazon, they're in consumer discretionary. So these are all tech stocks essentially, but they're cross platforms here, cross sectors. And when they're down, they drag all the sectors down with them. That's what happens when you have this tyranny of big cap tech. Santa Claus rally not looking great. Last time we had a down year, 2015, down 2.3% for the Santa Claus rally. Of course, we're only halfway through, folks. People think it's over. It's not. It's actually 7 days, and we're only 3.5 days through that. But the average gain is 1.3%. Right now, what are we down 100 points? We're down about 1.3% on the Santa Claus rally. So again, this would be a little unusual if we ended the year to the downside. Think about things this way. Think about 2024. What happened this year? S&P was up 25%, and yet earnings were up 10%. Well, that's a big difference. And what made the difference up is we had a multiple expansion. That was notable. We're at 22 times forward earnings, a little over that. When we started the year, a year ago, we were at 19.5. There's your difference in the multiple. That's a big change here. There's sectors out there. Look at this. This is the estimates for 2025, because that's what we care about. So tech is still leading, but there's plenty of sectors that have very healthy expectations that are much more, so we say, undervalued. In fact, some of them in the value camp, including some industrials and material stocks. These are perfectly respectable, yet nobody is paying much attention to them. So here is your hope for the rotation trade here. The potential, and if you look at some of these, Mike, Apple, the forward estimates for the big caps have flattened out. Yeah. As you know, Apple, Microsoft, Alphabet, they're in the low 30s. Amazon, mid 30s. Meta's the high 20s. They really haven't gone up much at all. Even Nvidia's flattened out. Broadcom's gotten a lot of attention because its estimates have gone up a little bit for 2025. So my point is, I'm making the value call again here. Sure. There is a reason with the numbers flattening out, multiples flattening out for big cap tech, to consider other sectors where there's perfectly respectable profit growth expectations. Yeah, I mean, really, if you look back, essentially.
So again, the mainstream narrative we're hearing from CNBC is large cap tech is top heavy and we need a rotation. Now, maybe that narrative will be right, but that's the narrative that they're going with, because you can see right here on the screen, big tech stocks are down, and we either get the rotation or the big get bigger. That's really what 2025 is going to be about.
Actually, there was a stealth earnings recession in the majority of stocks, right? Not the big guys that drove the indexes, but they're coming out of that now, right? So you have earnings growth that's broadening out a little bit. Also, Bob, worth noting, I mean, the max decline this year in the S&P was like 8.5%. Yeah, most years, you at least get one full double-digit correction. Yeah, I'm not terribly, we'll talk more about it in the next hour about the warning signs for 2025. But if you think about what motivates the stock market, which is the direction of earnings, are they growing or are they shrinking? And profit margins. 12% profit margins still up there. I mean, the story for years is, they're going to deteriorate. They're not. The profit margins is how much are they keeping from that revenue all the way to the top, to the bottom line. 12% is just about a record. It hasn't slipped at all this year. And that's why the stock market is.
By the way, that's before the so-called efficiencies of AI really working its way into the enterprise, if that actually happens.
If that happens, and of course, one of the things I mentioned this morning is a threat to 2025 was people stop believing the AI story. I think that's not going to happen. I think you're in the same camp as me. I think AI is going to provide remarkably great efficiencies out there, improvements in productivity.
But is that already being
It's
factored
priced into
in,
certain
yeah, it's
stocks, but it's
priced in.
not priced into what happens with the entire world just becomes better and manages their money more efficiently. Look what software as a service did to the bookkeeping industry.
Yeah.
There's nobody writing in books anymore. There hasn't been for 25 years. And look how much more efficient corporate America is because of software as a service. Well, here's a software that's going to eat all the other software that's out there, essentially.
Productivity could go up, and that's a key component of GDP, of course.
Exactly.
Yeah, it's already started a little bit anyway on the charts. Bob, thanks
Thank
a
you.
lot. Talk soon. Let's focus on Apple a little more. Stock under pressure this morning, putting a pause, at least in its march to a $4 trillion market valuation. Our next guest says Apple is the most user-friendly touch point for consumer AI, and the cycle will take longer to materialize in 2025. Martin Yang, Oppenheimer Senior Analyst of Emerging Technologies, joins us now. Martin has a buy rating on Apple, price target of 250. And Martin, let's start there, because obviously you like the big picture Apple story with a buy rating, but your target's about where it's trading right now. Does that just speak to current valuation?
No, it speaks to a lag between how frequently we update our price targets. But our rating, our conviction in Apple as a stock has not changed.
I think their thesis is similar to Dan Ives' upgrade cycle. I mean, all these analysts don't have anything original to say about Apple. It's just upgrade, upgrade, upgrade. All right, we'll see if we get an upgrade. I mean, the upgrade cycle's got to happen at some point. At some point, the street's going to be like, why the hell is Apple worth $4 trillion? And it's got to be because people are upgrading their phones. Either that happens in 2025 or it doesn't, but I think that will be dictating kind of at least how the analyst community thinks about Apple. But granted, that doesn't even matter because Apple's just going to go up regardless. At least it's gone up regardless. So really, I guess 2025 is going to be a question of how much the street's willing to keep paying for Apple and if there's enough growth and upgrades to get them to be okay with paying these valuations for Apple. But as you can see from what we just heard on CNBC, I mean, a lot of them are saying this rotation needs to happen. And I don't think they're necessarily wrong in saying the rotation needs to happen. I think it's just, again, we've had this conversation for a couple of weeks now. Like, why would people go to small caps when they could invest in Google? That is the question. And if you argue, well, small caps are undervalued compared to Google, which it's probably correct if you just look at their PEs, even though Google's not the best example because Google is pretty cheap. But let's say undervalued compared to Amazon. People still feel better knowing they have Amazon stock in their portfolio. Like, most people are not professional investors. Most people don't even know what IWM is. Like, most people have no idea what a small cap is. They're going to think like your hat is small or something if you talk about a small cap. But everyone in the world knows what Amazon is. And so I don't know, dude. Like the idea that small caps or the market rotates that meaningfully from the names that everyone knows and loves, it's a little tough to see. But granted, if Apple gets to $5 trillion off no justification, then I think like you would have to have some rotation. But the question is, how big do they get if that rotation ends up playing out? Amit, what grab leaks do you like? Any recommendations? So I personally like buying. This is what I'm personally buying, the $750 $10 spread. So you buy the $750, you sell the 10 on top of it for January 2027. Right now, that spread is going for 32 cents. You're probably going to have to pay like 35 cents to get a fill. Let me try right now. Let me see if I can open one of these right now. Let's do 35. Would that fill at 35? Let's see. No, you're going to have to pay 36 probably. So it's going for 36 cents. Max value of the spread is $250. So 250 divided by 36, it's about a 7x. If Grab can get to $10 by 2027. So if Grab's $10 by 2027, those option spreads can go up by 700%. Now, again, it's not as safe as buying the stock because if the stock's stagnated for the next 2 years, you're going to lose all of your option premiums. But if you think the stock goes higher, those spreads can get more valuable. So those, but I also like the $10 leaps in general if you don't want to get fancy with the spreads. I think those aren't horrible. The 750 spreads is leaps as well, a little bit more premium you're paying for it, but a little bit safer in terms of your strike price versus going out to $10. For real says, Amit, if you believe shelter will give out leading to more disinflation, where do you see the bottom on inflation? Do you think a second wave of inflation will happen after a cyclical decline? If not, why? So I don't think, based on the data that I'm looking at, we are going to see a second wave of inflation to the levels that we saw early in 2024 and late 2023, which means CPI would have to get to 4.5% for a real second wave of inflation to happen. We're at 2.7 right now. I don't think we go up to 4.5. And the reason for that is because of what you mentioned. I think shelter is going to come down. We're already seeing rents come down. We're seeing housing starts, although they're down, they're better than where they were a couple of years ago, or sorry, before the pandemic. And so there's some pieces of housing data that makes us feel good. The biggest problem with housing is mortgage rates. That's 7%. So I think if mortgage rates come down substantially, which I think they will, at least in the first half of the year, substantially meaning at least to 6% from 7%. We're not hoping for 5s yet. Hopefully by the end of the year, we get to like 5.7, 5.8. But if we go to 6%, the 10 year is going to come down as well. Inflation should come down from 2.7, hopefully to 2.4, 2.5. And that's where the Fed cuts rates multiple times. If we do get a second wave of inflation and shelter doesn't come down for whatever reason, there's probably a bunch of reasons why shelter could be stubborn. Even though, again, I really think shelter is coming down, but let's say that doesn't happen. And we get CPI back to 4.5%. This market's going down 20% next year. It's just that simple. Like if we have a second wave of inflation, we're getting no cuts and we are potentially getting a hike if we actually get a legit second wave of inflation. Now, I don't think that's going to happen. I think the data is too strong to the downside. And I think anyone who believes that is really trying to stretch for a bear case around inflation. There's other bear cases besides inflation, but if you think we're doing that, then you really think that inflation's not coming down at all, and that's your bear case. I don't think that's happening. But if we get a second wave of inflation, meaning the past 2 years were basically fake in regards to Jay Powell getting inflation down, and he's not going to go down as one of the greatest Fed chairs of all time, because I think if he pulls this off, he does go down as one of the greatest Fed chairs. Then you've got another scenario like we had in the 80s and things get really dicey. And it's going to be really hard to buy Tesla at 420 if inflation's at 5% again. Like, because interest rates are going to potentially go higher. Your cost of leasing a Tesla is going to go higher. Like automotive insurance is going to go higher. Like we just can't have that happen to have a third year bull market. We just can't have that happen. So the best case scenario over the next couple of months is inflation is not going higher, even if it's not going lower. We need it to stay flat. And once the market is ready to start factoring in shelter coming down, along with automotive inflation going down, along with the 10-year going down, then hopefully inflation starts making its way back from 2.8 down to 2%. The Fed still thinks their target is 2%. I think the Fed's kind of BSing. I don't think, like, if we're at 2.2%, is the Fed really going to be like, nope, we got to get to 2%? I don't think so. I think Trump's going to pressure them enough to be like, guys, like, chill. It's at 2%. Like, we don't really need to be this stressed. But it just depends on how aggressive the Fed wants to be when it comes to this. I guess we'll find out. in the next coming weeks. All right, we are going a little green across the market. So let's take a look. Apple still red, but getting a bit green. Nvidia still green. Rumble's now down 12%. Rumble continues to go red. Tesla's down 2.9. Grinder just went green. Robin is getting a little bit more green, 38.16. Bitcoin still below 92, but it's not at the bottoms of 91. S&P 500, that's a green candle. That candle is green. Can't deny that candle's green. The Qs should be green then as well. Yeah, Qs are, well, they're not a green, but there's a green candle from the bottom of 511. And that means IWM should be rebounding a little bit. Yep, IWM rebounding from 217 to 219. All right, we've got a little bit of green. Now we got 5 hours left to see if this green can last. So 3% will be the new 2% on inflation. Maybe. I mean, look, if Trump really gets upset at Jay Powell and the Fed, Trump might say, why are we concerned about 2% versus 3% inflation when Venezuela has 500% inflation, right? And that's not a crazy argument. You could make an argument that 2% is the most arbitrary number ever and 3% is not that different. But then again, the legitimacy of the Fed rests in the ability for them to have a target and stick to it. And if their target's 2%, they're probably not going to want that legitimacy to get diminished by then changing the goalpost, especially after they've constantly said that 2% is their target. And so that's what we're going to be looking out for going into next year. Fear and greed is still in fear. That's correct. We are still in fear on fear and greed. The VIX is down. The VIX is coming down a little bit more as well. So you're getting some signs of a potential reversal. I don't know if we go fully green for the day, but we definitely are looking like we're not headed for new bottoms yet, given everything's doing a pseudo reverse. We still have a lot of hours left in the day to see. Marathon was down 9%. Now it's down 6%. Palantir was down 4%. Now it's down 1.8%. Rocket Lab was down 9%. Now it's down 6.8%. And Nubank having the best day out of everybody, up 4.7%. Not bad for Nubank. Rocket launch from India in 25 minutes. India is launching a rocket today? India rocket launch? In ISRO's SPA DEX launch is expected to be the final rocket launch of the day. It follows on the heels of 3 Falcon 9 rocket launches. ISRO, is that the Indian government? That's not a company, right? Is that a government? I did not know India was launching a rocket today. All right. Well, I guess we're getting a rocket. Yeah, I see the link right here. PSLV CD60 mission. This is what it looks like right here. This is what it looks. Indian Space Research Organization. Okay, so it's the government. It's the government. It's not a company. This is what they're doing. Does India launch a lot of rockets? I feel like they don't. This is the first time I'm hearing about them launching a rocket. I feel like this is why it's a big deal, right? It's the first time in a while that they've actually launched a rocket. Dude, the amount of engineering and technology that goes into actually launching one of these has to be insane. Like, we're talking a full-on rocket with rocket fuel and all the other chemicals that it takes to get this thing up into the air. That's going to be wild. All right. Hopefully it goes well. Hopefully it goes well, and that encourages them to launch more rockets in the future. Who is the Musk of India? That's a good question. I don't, you know, whether you love Elon Musk or hate him, I don't think there's many Elon Musks. There's a lot of rich people in India who have built businesses and made money, but in terms of the innovation of Mr. Elon freaking Musk, love him or hate him, there's not many people like him. I mean, I would say there's no one like him. I mean, the guy is running 7 businesses. 3 of them are multi-billion-dollar businesses. One of them is trying to get to Mars, and the other one is trying to get cars to drive themselves. I mean, it's just insanity. It's just absolutely insane that he's doing it. But he is indeed doing it. Uncle in the chat says India does launch rockets frequently. This is the first time I've heard of them. Maybe this is the first big one they're doing today. I have not heard about India launching rockets at all. But it looks this is a pretty big one that they're doing today. Doug said, like I said, he is CEO of the year if you pick one of his companies, let alone 2. Yeah, so we had the stock market awards on Saturday night for those that were in the show, and we had a lot of different categories: CEO of the year, top turnaround story, stocks you're looking at next year, all that stuff. So that was fun. We got to go through a bunch of different names that we are looking at. And I think the consensus among all of us, me, Doug, Steve, Chris, and Matt, was that the big get bigger and that large caps are going to continue to win. And I know that's a little bit of a mainstream consensus, but it's also kind of contrarian because everyone's thinking large caps have to go down by 20% for the market to rotate. I don't know why you sell NVIDIA to get into small caps. I don't know. NVIDIA is not doing anything to give you the reason to sell NVIDIA, right? The only reason you would sell NVIDIA to get into small caps or something, or cyclicals or defensives or utilities, is because you're afraid NVIDIA is going up too much or NVIDIA's valuation is unsustainable. But it's not like NVIDIA's messing up earnings. It's not like Jensen's doing anything wrong. It's not like their tech isn't continuously expanding. It's all based on valuation. Same thing with Microsoft, Meta, Google, Amazon, Tesla, Apple. None of them are doing anything that are really saying, hey, this is the time to take some profits here. The only thing is valuation. And I think that's going to be the big debate of 2025. Is valuation a reason you sell Microsoft? Or is Microsoft's lack of execution a reason you sell Microsoft? And if it's valuation, then are you going to be right if they keep executing? Because is money just going to keep finding a way to bet on Microsoft over small caps? That is going to be, I think, the major theme of 2025. Yeah, that's true. NVIDIA did buy a small cap today. That's fair. NVIDIA did indeed buy Run AI today. So even large caps are buying a little bit more. Gene says, don't sell winners for losers. Yeah, I would agree. This is why Palantir, dude. If Vitaly, we run finance junkies the other day, Vitaly was like, you need to sell some of your Palantir. I was like, why? Palantir's a winner. Like, and if it goes down, I get to buy more and continue to be in the name for the next 15 years. Like, I want to be in this name for a very long time. I want to own more of the company. If it goes down, it'll suck because everyone will be upset that it goes down. But I mean, for the true longs, you're not going to be upset if Palantir goes down. You are going to be like, all right, was there a reason they went down outside of some macro event? No? Cool. I'm buying more. Even if there's an earnings miss, okay, companies are allowed to have a couple crappy quarters. It happens. Tesla went through 2 years of crappy quarters. But eventually, if you're a good company, you're coming back. And Tesla came back with veracity here in this 420 range, almost got to 500 a couple weeks ago. So I think we hold. I think we continue to hold. And I'm saying this knowing that Palantir's valuation is extended. So like Vitaly was trying to say, well, the valuation's up there. It's like, yeah, I know. The valuation's been up there for a long time. Like it's not, but selling has been the wrong decision every single time this year on Palantir. Now, granted, if you have personal finance reasons to sell, that's totally fine. But if you don't need the money and you just want to let it compound and you're ready to deal with the volatility, like it's not that crazy. Now, you could say the same thing about MicroStrategy. The problem is MicroStrategy is not a real business. So if MicroStrategy got to 500 and I got in at 300, you're damn right I would have taken some profits because like I just, long-term thesis on MicroStrategy is there, but it's not as sound to me as a thesis on a functioning company like Palantir. But with Palantir, if we get a dip, like it's just more attractive. Yet he's not selling his Bitcoin. Yeah, well, I think Vitaly is taking a little bit of profits. Carlos last night said, like, that was one of the main topics we had on if you guys are selling your Bitcoin. Carlos, I think, has sold a very small amount of his Bitcoin, but he sold enough to feel happy that he took some profits during this cycle, or at least during the stage of the cycle. So both of them want to hold on. Vitaly wants to hold on more to 150. Carlos is thinking 200 is when he would start selling more. So it's kind of the same thing I have with Palantir, right? I'm ready to hold this for a while. The only thing about Palantir is that it's not as volatile as Bitcoin. It's been volatile this year, but Bitcoin's volatility is a different level. So it's just a bit different holding on to Bitcoin. But if you've been in Bitcoin since 8,000, I mean, even if it falls back to 50,000, if you think it's going to keep going back up, that's why people continue to hold. And ultimately, it just comes down on how strong your conviction is on some of these names. Boeing right here down 2.5. Boeing bottomed at 170. Now it's at 176. Google is slightly green from 188 to 190. Meta 585 to 590, and then SoFi 1542 to 1570. You've got some reversals in the market. You've got some reversals in the market. ASTS is dying again. Where's ASTS? Wow, that's down 8%. So same as Rocket Lab. Both of them are down. Both of them are down. They both said they were selling Bitcoin at 100K early in the year. Yeah, well, we talked about that. Their opinions changed completely. I asked them about it. I was like, didn't you guys say you were selling most at 100K? And you have ETFs that came in, MicroStrategy that came in, Saylor with his balls of steel buying every single day. I mean, I do agree with them. The thesis on Bitcoin has changed, and I think it's easier to be long Bitcoin simply given the fact that BlackRock is not going to let this thing fail, or at least they're going to try to not let this thing fail. But the volatility is up there. The volatility is up there. I mean, take a look at the Bitcoin ETF outflows, by the way. The ETFs have not been good the past couple of days. On December 19th, they sold 670 million. The 20th, 277 million. 23rd, 226 million. 24th, 338 million. 27th, on Friday, 287 million. So we have seen well over $1 billion of outflows in the past couple of days on the ETFs after a month of straight inflows of about $350 million of inflows every day. So although the ETFs are amazing, the ETFs are not like BlackRock saying, we feel like buying Bitcoin. It's people holding IBIT or selling IBIT. And if they start selling more IBIT, BlackRock has no choice but to sell some of their Bitcoin. So that's another thing to factor in when it comes to overall volatility of the ETFs. Thoughts on Archer at these levels? Look, I like Archer, but I don't know what the fair value is of Archer. I think selling puts on it at like 6 or 7 is not a horrible option. If you're buying it, you're buying it up 3x on the year. So you just have to remember that when something's up 3x and you jump in and buy, the odds are it probably goes down than up. So I think selling puts at it are not crazy. But again, they don't have earnings either. They're another speculative name. That's just, it's based on the potential of them. And I think they have some of the best, but I would buy Archer over Oklo, to be honest. I think there's something much more tangible to Archer than Oklo. But when we go red, speculative names get hit the most. Granted, we are recovering. Look at the S&P, down 1.28%. We were down 2%. We're up 80 bips. Apple getting a little recovery from 250, now at 251. GameStop is still green. NVIDIA 137. Rumble even was down 13%. Now it's down 11%. Grinders at 18 bucks. Continues to grind along. And then Palantir was down 4%. Now it's down 1.3. I mean, you are seeing a bit of a recovery. Qs as well. We're down 2. Now they're down 1.5. Maybe we get a little bit of a reversal. Maybe. Holo's up 70% on the day. Yeah, I don't know why this thing is up 70%, but this is another name that's running today. This one ran on Friday too, right? There's a lot of these small caps that are running out of nowhere. It's kind of weird to see. Yeah, it was at $1.20 and it hit $5.20. Now it's at $3.99. So this one's up 2 to 3x in the course of a week. This is the form for the New York meetup for those that want to see it in the chat. Here it is right here. So again, January 18th, that is the goal in New York, Bryant Park. And then we'll do wherever the day takes us. If it's a group of 20 of us, we can go out, we can go to the bars or something. If it's a group of 100, it'll be a little different. The other thing that's interesting about this is that you guys will get to meet each other more so than me getting to meet you guys. So you never know. You know, some of you guys might become really good friends with each other if you connect in a meeting in person and you actually get to hang out and stuff like that. So I think it'll be cool for just everyone to meet each other from different walks of life and, you know, continue to get more friends. So I think it'll be fun. It'll be a good day. And it's in New York. It's beautiful New York City. I hope it's not as cold, bro, because I went to New York over Christmas break and it was freezing. I just hope end of January it's not that bad. It's probably going to be pretty bad. But like if it was a little bit warmer, it'd be nice. But if you're coming, definitely make sure you have your earmuffs and your jackets and scarves and all that stuff. Because it's probably going to be cold. Nike down 2%. Robinhood down 1.98%. Robinhood's doing an announcement tomorrow. I don't know what the announcement is, but it's going to be an announcement on 12/31. I'm hoping it's Super Bowl event contracts, and we can start betting on the Super Bowl on Robinhood. Wait, but we can't do that yet, right? Because we don't even know who's playing in the Super Bowl, right? We still have to do the AFC, NFC championship games. So it can't be Super Bowl event contracts. I don't know what it is then. It's going to be something. It's gonna be something. It might be a 2% transfer brokerage option for everyone who wants to transfer their brokerage that missed the deadline last time. Maybe it's gonna be a transfer option into Robinhood. But I have no idea what else this could be on 12/31. It could be like who makes the Super Bowl contracts. Yeah, maybe it could be that. It's gonna be something. Looks like they're hyping it up for something. So tomorrow. Maybe we get brokerage transfers. Maybe we get Super Bowl event contracts. Maybe something. One thing on Robinhood today. So I'm going to be on a Twitter Spaces today on the market close. So today's market close. We don't have a ton of news. We don't have any earnings or anything like that. So at 4:10, if you're in the market close, you'll be listening to me live on a Twitter Spaces with Stephanie Guild, who is the head market analyst at Robinhood. So I got told last night that they're doing a Twitter Spaces. Wolf Financial, who's a big account on Twitter. I met him at the Army Navy game. He's super cool. Evan, Stock Market News. You probably know him as well. They reached out to me last night because they needed a third co-host. I can't say that word. Co-host. And Stephanie Guild, for those that don't know her, she's awesome. She's ex-Goldman Sachs, and she's now basically the Liz Young of Robinhood. So instead of Liz Young, she is like SoFi has Liz Young. Robinhood has Stephanie Guild. So she'll be on today, and we'll get to ask her some questions on where she thinks the market's going. And that'll be for like 40 minutes on the market close today. Words are hard. Words are indeed hard. Words are hard. Palantir recovering, guys. It's only down 1% right here. Palantir, $78. We were just at $76.50. One thing I talked about last night on the Sunday Future Show is that Karp has a book coming out in February. And I think the marketing on that book is going to be aggressive. And I think more people that didn't know what Palantir was or who Alex Karp is are going to start to notice a lot more. So that you know, that's not a reason the stock has to go up, but that is an argument that more media coverage will be compounding. And with that media coverage compounding, hopefully that is more bullish for just people learning and discovering about Palantir. Now, granted, if we have a macro pullback, the book is not going to save it, but I think that is another tailwind that we have to remember for Palantir. Nvidia's green a little bit. GameStop's green a little bit. Faraday Futures still up 50% on the day. Qs are down 1.3%. S&P, it is recovering. It was at 584. We're at 588. We were down 2%, down 1.13% now. We have a few hours left to kind of see how the market turns out on some of these indices here today. All right, that is it for me, folks. Let me get you guys out of here. Let's do word of the day, and we'll be back for the market close. 2 hours and 34 minutes on the stream. We're lacking a little bit. Usually we go 3 hours, but I think 2 hours and 34 minutes is hopefully not too bad. And hopefully the rest of the red is done for today. And maybe it was just a fire sale, or maybe this breaks out. Well, we will see in the next few hours. Word of the day is cognate.
Cognate.
Similar in nature or quality. Music and math are cognate, both rooted in patterns and structure. The novel's themes are cognate to those in the author's earlier works exploring identity and belonging. Cognate. Never heard of this word before. Cognate. Similar in nature or quality. All right. I guess if you're describing two things together in a certain way, cognate. What is the root of this? It's from Latin, to be born, and from the word nascent. Oh, it comes from the word nascent. No, that makes a lot more sense now. All right. Well, hopefully the stock market and red are not cognate, even though they have been cognate all morning. And hopefully we get a little bit of a reversal towards the end of the day. All right. That's it. Thank you, everybody. We'll be back 3:45 p.m. Amit's nails are cognate to female nails. Dude, these nails are beautiful. They're freaking shining, bro. I'm telling you, nail hygiene is a thing, and it feels good. A manicure and pedicure feels freaking good. Like just for the little massage you're getting, it feels great. So all I'm gonna say. That's all I'm gonna say. It's like, if you're a guy, don't hate it until you try it. It's not the worst thing in the world. All right, that's it. We'll be back 3:45. Stephanie Guild, we'll be talking to her on the market close. We have no earnings today. We have earnings starting in 2 weeks, so we'll get into earnings season pretty soon. But until then, we've got 2 days left of December. Hopefully this day can end out a little bit green, and then tomorrow we have a green day to end out the year. But we're gonna have to see how the market goes. And then we get into January. January 1st, we're closed for the day. I think I'll probably still have a stream. I'm going to be streaming on New Year's Eve, by the way. So for those that are not doing anything on New Year's Eve, probably 7 p.m., I'll be live, and we can just drink and talk. And then January 2nd, first days of the stock market being open in 2025. So that's it. 2 more days left, and then we got 2025, and there we go from there. All right. Thank you, everybody. I'll see you guys 3:45 on the market close. Bye, everyone. Have a good one.